you behind me. Na 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 na. I'll keep going, nothing can stop me. Na 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 na.
This is the single biggest principle, and it bothers me that people are very careful with their money. The public, when they buy a refrigerator, they get a Consumer Reports, they buy a microwave oven, they do that. They ask people what's the best kind of radar range, or what kind of car to buy. They do research on apartments. When they go on a trip to Wyoming, they get the mobile travel guide, or California. When they go to Europe, they get the Michelin travel guide. People will hear a tip on a bus on some stock, and they'll put half their life savings in it before sunset, and they wonder why they lose money in the stock market. And when they lose money, they blame it on the institutions and program trading. That is garbage. They didn't do any research. They bought a piece of junk. They didn't look at the balance sheet, and that's what you get for it. And that's what we're being driven to, and it's self-fulfilling. The public does terrible investing, and they say they don't have a chance. It's because that's the way they're acting. I'm trying to convince people there is a method. There are reasons for stuff.
And we here are here to tell you the reasons why stocks go up, or at least they should. You know, sometimes people are a bit fanciful about certain stocks, and that's okay. But there are reasons that stocks go up, and that's what we're going to talk about tonight. But before we get to that, we have some breaking news that came out literally hours ago that, given the subject matter of our show, I think is a bit too much fun to pass up on. So before I bring on my guests, I wanted to go over this article from Bloomberg. 2 workers for the SEC's Edgar system charged with insider trading. 2 men who work for the Securities and Exchange Commission's Edgar public filing system was charged with insider trading and allegedly pocketing $1 million by stealing non-public information obtained through their jobs. Prosecutors say that between March and June of 2025, the pair engaged in a scheme to obtain information about companies which announced that they were entering into merger agreements or partnerships that resulted in significant increases in the share price of each company's stock. So yeah, they're going to be getting federal charges and criminal charges for that as well. Fun times to be had at all. I don't know. Platinum, maybe you can explain this one to me. How do you think that they thought that they were going to get away with this? You work literally at the SEC. What's the logic here?
I mean, I have no idea. But, well, nice try.
Yeah, I mean, I suppose it's a good try. Today, we will be joined by a guest that will be filling in Amy's slot tonight. He's been on the show once. Please welcome Running with Bear. How you doing?
How's it going, y'all? Long time no see.
I know, right? But you found the right time to come in because we've got stuff to talk about. Shitty companies and their shitty balance sheets, bankruptcies.
That's all that matters.
Kevin's the deal. Look at this.
There he is. Oh my gosh, I love him so much.
Good boy. Yeah, when we adopted him, he had heartworms and some other stuff. And 3 months ago, he's now heartworm free. So
oh hell yeah.
Yeah, we're gonna take him to the coast tomorrow to celebrate. So we get
what a good boy.
out on the beach.
Oh.
Best boy going to get a reward.
He's a good boy.
Oh my god, that's so funny. I have like little Yorkies and I lift them up like how you lift him up.
Good boy.
He's so
yeah,
cute.
him and his sister are finally getting along. It was a bumpy first 4 or 5 months with him and Molly, but they get along now, so we're pretty excited. It's fun to have 2. It's a lot more. 2 Goldens is pretty high energy, but
2 dogs is the best though. Yeah. Like having 2 dogs is literally the best.
Yeah, they play and they seem to like talk to each other, I guess.
Oh, cute.
But, guys, we doing some balance sheet stuff tonight, or what are we doing?
Yeah, we're doing some balance sheet stuff, some understanding some things. I figured we're going to start with like the most serious company and then progressively go down into the 9th circle of hell as we go along.
Do you mean like not seriously bad or?
Oh, no. We're starting with a company that's in bankruptcy right now. And our next company after that is going to be a company that's going to be going into bankruptcy. So, but like serious, like legitimate companies and then going down the shitco ladder until we reach the 9th circle of hell.
Okay. All right. Sounds good.
So the one that I was wanting to start with was actually the one that I was kind of directed to and was most interested in, because I had seen this link from Muddy Waters Research going to a YouTube channel where we have found the rabbit hole of residential solar panel shenanigans.
Yeah.
How many of these videos had you gotten the chance to watch? Because I'd watched all of them, but I had all watched them during the work week. And so Saturday, after I'd helped my mom with her garden, I was like, okay, I'll go over these, do a refresher. And then I realized that these are like 20-minute videos of pop. And I'm like,
Yeah.
So
Yeah.
we'll see how much of them I actually remember.
Yeah, I got through 4 of them. I mean, full disclosure, I put it on time and a half. But dude knows his stuff. I'll give him that. Like I just didn't like IRS stuff. Haven't done a lot. I mean, I'm a CPA, but I just haven't done a lot of tax stuff. But like the stuff he was claiming is pretty damning.
Right.
I do know, like the problem is with the IRS stuff, like, people lobby for a certain treatment, and then usually what happens to that treatment, you can drive a truck through it in terms of like valuations and kind of subjective part of accounting stuff. So you end up kind of like diving into stuff what he talks about where you get these overvaluations where they can get bigger tax credits and this and that. So like it was
that was the first video that kind of explains the other videos. It was how residential solar companies get away with $50 million in tax fraud, which the way he explained it, it is tax fraud, but it sounds like you were saying, it's also kind of a legitimized loophole. And it also explains how these solar companies actually make their money. And it's not off of the actual residential installs.
Yeah, like I watched all 4 videos, and like the spreadsheet's probably the worst thing with the plug section and moving customers around. But like outside of that, like to go from like gross negligence to fraud, that's a big jump. But I do think it's interesting. In the $50 billion, I wasn't quite sure how he got there. I got to go back. Honestly, I read through all 4. I can't remember, but it is. I wasn't super surprised given what they were doing, but like he makes a lot of good claims in terms of the O&M, the operation and maintenance stuff. That's pretty hard to get around if you're not reserving enough of that, right? So.
I don't want to go through the whole video because it's like I said, these are each like 20-minute videos. But to get you up to speed, Platinum, on what's going on in this video, basically in the video that kind of also helps explain the balance sheet stuff, it basically explains how most of these residential solar companies make their money, and most people can't afford like having solar panels put in on their roof. These are like expensive, like $40,000 systems, like. In some cases, they're about as expensive as the house, that are going in because you have the solar system, the battery pack, and then you got to put it into the, actual grid and stuff like that. So what they do is instead of you buying the system outright, they lease it out to you. And then they take then you get a certain payments that you have to make and certain, kickbacks. And then they take the tax credit. But they don't just take the tax credit and put it on their balance sheet. They take the tax credit and then they spin it off to this subsidiary company that securitizes it and then sells it to other companies so that they can get their green energy credits.
Oh, okay.
And this whole process is how these residential solar companies actually make their money. In this kind of shady tax scheme kind of way.
Interesting. I did not know that.
But it's it's an interesting watch. It's like about 15 minutes, and it kind of really opened my eyes up because I had no realization that this is actually how the game is played.
You had to watch it a couple of times to understand what he was saying. It's a well put video, but it's so jarring. It's like, God. I mean, I do see like the private equity stuff. It's not. I mean, when you really think about it, it's not super surprising this day and age. Like private equity comes in and guts stuff, right, to get the free cash out of things. Like it's not. It's really kind of the next step and all that, right? I just didn't think it was going with solar panel stuff.
Well, I didn't either. I know that a lot of the people that I follow have been talking about these solar, these residential solars being kind of scams because the whole operation is kind of, like the whole leasing you out the solar panels, and then also where's all this electricity, whether it's going to be used, how does it affect the power grid, all this stuff. And I'd understand it stood at that level. That's kind of a scheme. And of course, you had stuff like what was that one that Tesla bought that was kind of this deal that they pulled to save one of Elon Musk's friends or family members that were running this one retail solar company, the one with the shingles that were solar
I
shingles.
don't remember that. Yeah, what was that?
I can't remember.
Way back.
It's been so long. That's probably why I've forgotten it. But I didn't realize it was also all this accounting shenanigans stuff as well, which really threw me off.
Yeah, that's the thing. It's like people got a certain view of accounting, and it's really a lot of it's fairly subjective. Once you get past, just your regular sales and stuff, there's a lot of gray in what you do, like reserves. Because when it's not a known thing, like you're just buying a cell phone or you're doing this or doing that, you're relying on estimates, right? So the company comes up with their own range of estimates, and the auditors will come up with their own range of estimates based on their knowledge of other companies. And it's like you're trying to find the middle number that the auditors, they're not going to audit their own work, but they're going to come up with a number like, okay, this seems reasonable given everything that's going on. But they're not solar experts, right? So it's just, even in the context of this example, it could just be off. Right. I know there's a lot out there, but it's such a high bar to get to fraud. But
right. It's like how sometimes in court where it's like you don't accuse someone of fraud unless you have evidence of it, when them just being an idiot can suffice just as well. It's kind of a high bar if you want to use the F word in finance.
Yeah, I've seen 20 years of bad spreadsheets, right? And people they do what they're going to do.
So speaking of the accused fraud here, before we get into it, I want to say that this is not particularly new. This actually came out, let's see here, back in April is when Forbes reported on it. But basically what we're going what's really the most funny part about that is 2 months later, they filed for Chapter 11 bankruptcy. So maybe there was a reason they were cooking the books. Who knows? Still didn't work out for them.
Yeah,
but
seeing a section called just straight up plugs, oh, that's not a good look.
That's definitely, well, here's the funny thing about it is, so how people found out about this balance sheet was, it was a private in-company balance sheet that was put on a Google Drive that they forgot to properly secure. And so someone just went into the link for the Google Drive and got it.
I see that happening, right?
And then they did a good job. Like he explains in the first video. Let me pull it up here. I'm not going to actually play it, but it's in this video here. I have Sunnova's second set of books, where basically there were things that he noticed in the spreadsheet that were referencing to things that he couldn't find, and he found out that they were locked, so you couldn't access them without a password. So, but they didn't disable copy and paste. So he just straight up copied the entire Excel spreadsheet, repasted it, and then once it was in a new book, he could disable the secure lock and then get to the second set of books that they were hiding in their own books.
Wow.
Which I think that's why he's saying he's using the F word, because it looks like a very dedicated effort to hide or, keep from public view what exactly is going on.
Yeah, and the customer account stuff, I do think he had a point there, because I think they were monkeying. It felt like they were kind of messing with.
Yeah, I think that was his fourth video where he was talking about that they were monkeying around with what accounts were considered solar, which ones were considered battery, and which ones were considered security accounts, I think.
Yeah. Yeah, because the average total customer value was barely moving, which that doesn't make a lot of sense.
That was this here, I think.
Struggling, and then he ran a random number generator.
Yes.
And it did.
Where you couldn't tell which one was the random number generator and which one was the right one.
And then there wasn't even a comment in a cell saying, you know, use the same numbers in multiple contexts, right? So it's like,
Yeah, that's the name of his YouTube channel. It's called Cell EN567, which is the cell that said that. Which is like this guy is undersubscribed with like 48 subscribers doing
God's
A+
work.
comedy like that.
Yeah, because he knows it's clear he's got a good handle on this stuff, and he was pretty funny about it too. Which to make this stuff sound funny, that's a pretty good trick.
So was there anything in particular from an accounting standpoint that when you were looking at the books that really like stood out to you from the videos he was talking about?
The O&M I thought was, I mean, the customer account stuff, like, you know, people play games on the financial analysis side of things. That's always a thing. But for me, like the O&M, not valuing the repair stuff, like that's a problem. But you know, Forbes kind of came back at that. You know, in their article.
Yeah, we have the article right here. They did have some replies from them about I think here at the bottom of the article.
Yeah. They had 105 million, and they had decided to allocate 56 million to G&A rather than O&M. That, like, allocating that to G&A, it's like that's a little weird to me. But again, I'm not a solar expert, so
right.
All that the 161, right? So you know, the problem is you're dealing with consolidated financials, right? And it's just at the high level, it's hard to get all the ins and the outs, right? To know
because it's not the full thing; it's just the consolidated for the quarterly.
Yeah, because internally, like I can see all the pieces, and I can know if I got a decrease of 50, it's probably actually a decrease of 100, but I got 50 add backs to get to the net 50. But you know, we're only seeing stuff at the highest level, right? So.
Yeah, and that's the problem going with quarterly instead of the yearly 10K ones, because 10K is the ones that's fully audited, and all the quarterly ones are your consolidated financial statements. They're not exactly the full meter stick.
Yeah, but the fact they filed bankruptcy is pretty damning.
Yeah, you know, right? I haven't gotten the chance to post it yet, but because I haven't gotten the chance to listen through the whole thing, mainly because this is the first bankruptcy that I've looked at where the first day hearing took 2 days. There's your sign. I haven't listened to it, so I don't know if it's anything about any of this or if there was any shadiness going on. It's just, I mean, I was talking to Linda Reel, and it's like this. I've never really heard of that. It's exceptionally rare for you to have a first day hearing that. It's like, actually, we'll come back to this tomorrow.
Yeah, God, it's I just didn't until I got on like this internet stuff and how bad some of this stuff gets coming off. Because the last bankruptcy I really covered was the whole Bed Bath nonsense, and that was just
oh boy.
Well,
if you stick around past the balance sheet stuff for the filler stuff, we got some Bed Bath stuff, all right.
Oh, do you really? Are we still doing it?
Yeah, well, we still got people filing onto the docket like a bunch of numpty idiots. I'm pretty sure Platinum knows what I'm talking about. So,
no, Lynn,
this is the song that never ends.
No, the last thing Lynn sent me was something about horses. Some guy miscounted them.
Yes. Oh, you'll
my
have to listen to that. It is on my YouTube channel. It's hilarious. It's Jeff Curzon. I even have got his.
He had to correct the record. He's like, my parents actually only have 3 horses, not 4.
Oh,
He's like, I called to see if there was a police report because I thought they had 4 horses. And the judge is like,
I don't care. I'm past that. Like, what is? Like, can you get your point?
Yeah, because I don't even know. Like, when did I'm impressed people are still. People get caught on stuff. I feel for them, but I'm impressed that there's still people still going on, right? Because like, when was it?
Amazing.
Has it been 2 years now?
It's been
literally September 23rd, 2020, or I'm sorry, September 29th, 2023 was.
Okay, so yeah, it's almost 2 years.
Almost 2 years.
Yeah, it'll almost be 2. And the last thing on the docket was somebody requesting a refund.
Yeah.
Literally, that's exactly what we were saying.
But yeah,
so yeah, endless entertainment from
that. Can always we always end these shows going like, we won't have enough next week. There's no way. We get to Friday or Saturday, we're like, we have too much, but we need to cut.
Yeah.
It just never stops. Speaking of which, we have one of our most recent meme stocks that we've been starting to cover. From a company in bankruptcy to a company that will be in bankruptcy probably Monday. Wolfspeed.
Mm-hmm. I made some good money on puts though, so thank you, Wolfspeed.
Yeah.
I appreciate you.
Have you gotten the chance to? Because what I was going to do with this, because this is an interesting situation, because this is a bankruptcy where there is actually an equity interest. This isn't Bed Bath and Beyond. Shareholders could get 3 to 5% of Newco equity.
Yeah, that's true.
So we have an experiment here. Well, first of all, we need to value shareholder interest, but we need to figure out if it's really worth, because the shares have been beaten down. I think right now they're trading around 40 cents, something like that.
I thought they were pushing more than. Ooh. I haven't checked it. I mean, it's been like a month. I looked at this thing when you pinged me about it. I was like, oh, okay, that's we've taken a turn here.
Yeah, well, because a lot of what was going wrong with it was the interest expenses, if I remember correctly, were piling up. They at the beginning of this month they put on a 30. They basically executed their I think they get a 30-day reprieve where they can try and figure out if they can find out their how they're going to pay their interest for that quarter or whatever. And it was something like, what was it, Platinum, like 400 million or something like that.
I'm not sure.
Which was a significant chunk of their cash. Not all of it, but it was a pretty big bite out of crime. Yeah, and they're over leveraged on debt. That was the main problem. They were trying to do an out of court restructure, and they ended up doing an in court restructure because they're going to move a lot of the debt over into equity. Let me see if I can find here we are. This is the agreement. So they're restructuring the notes and going from, what is it here? I think. Yeah, so they're going to get rid of 4.6 billion in debt, and they have long-term debt of, well, this must have been updated from the last recent quarter because it's showing, because they took out new debt debentures. Yeah, so they had about I want to say 5 million or something in debt is what they said in this filing, and they're going to reduce about 4.6 of it. Mm-hmm. And then they have to do some regulatory hurdles and things like that. That determines whether these shareholders get 5 or 3%, because there's with one of their creditors, they have some regulatory hurdles. But yeah, my big thing when looking at this was not so much okay, cool, the debt that solves the big a problem, but the bigger problem is that this page here where you can clearly see the operational loss that the company is taking. So good. You got rid of the debt. You're still not making money before you have to pay that off. So can we address this problem right here?
Yeah, I was looking at the operating expense, right? It's out
right
there.
Well, part of the problem is they built this new semiconductor factory, and they said it's more efficient and it gets things done. And they were anticipating that because of everyone buying EVs and stuff like that, they'd be making chips for all these EV cars because they make this silicon carbonate, which is, in your computer, you have silicone chips and stuff like that. But this is silicon carbonate. So it's a lot stronger, a lot more heat resistant. And so, you have more mechanical applications for it in, say, cars, or in, technology that's going into extreme working conditions, say, robotics or, rocketry or things like that. Except none of that buying panned out. And obviously it's more efficient. But as you said, was it COGS that you were looking at on that? Yeah. Clearly it's more expensive to run this new factory is what I'm thinking is the issue.
Yeah, I mean, there are some. When you look at the operating expense, right? There are some you got some loss on disposal, which that's one time, and you got factory startups. That's one time, but like you can't. It's hard to get around when your COGS is in excess of your revenue, right? Like that's just kind of 101.
And I wonder if they're just not getting over the revenue threshold because they still have that factory. But if you look, 3 months ended from last December, and they were doing fine, like not super great, but they were making 27 million as opposed to losing 37 million. So it looks like basically right now their revenues are just below what's operationally profitable on the company. And if revenues went back up, that you might have like something salvageable here, which is why I think why Apollo is circling like the debt vultures they are on this bankruptcy. It's like there's value here. It's just fixing that value.
Yeah, because I haven't done a deep dive on this, but if Apollo's coming in and buying it, or they're circling,
well, they already have the debt, and they were the chief operator of the restructure.
So you're going to come in and get what good chunk of property or PP&E. There's some inventory. Just that having COGS higher than your revenue. I mean, it's just broadly speaking, either you're not scaling it to the degree you thought you could, so you had this monster.
That is probably what I think the bigger issue is. But what was the other one you were thinking?
Or the market's not there, right? So it's
a little bit of A and B.
Because if you've got too big of a space, that's going to inflate your COGS, right? Because you're not getting the per unit down enough like you thought you could. So then your COGS is elevated, as opposed to if you had a smaller facility and you pump out smaller batches, right? That's one thing. Or two, when you go to sell the stuff in the market, you're just not getting the pricing that you thought you would. But both are fixable, but you got to have time to fix it. And that's where the balance sheet comes into play. If they've got this much interest expense, and you just don't. You need some leverage, but when you've got that much running a loss like this, you're on borrowed time. Does it have interest expense?
Interest expense? Let me roll back up there. That would be under the income statement, right?
Yeah, interest expense net of capitalized $85 million for the 3 months ended. It's quite a bit, concerning that revenue of 200. That's why when I look at these companies, I always go to the balance sheet first and look at that first, and the income statement, just because it tells about it. The balance sheets, you have to manage that, right? The income statement with accounting, like you can dress stuff up and still play within the line. It's hard to fake a good balance sheet, though.
Yeah, and these are older like financials. This I think was from back in. Because if they hadn't gone to bankruptcy, their second quarter financials would have been coming out pretty soon. Because last year they had them out by the 30th of June. So this was I think the last one came out in March. So we're looking at like by now 4-month-old financial statements, trying to scry into the bankruptcy stream as to what's going on. Maybe they'll give us some updated financials when they file for bankruptcy, but that's really on them if they want to do that. Sometimes when you have a company that goes into bankruptcy, they just stop doing financials so they get out of bankruptcy. Sometimes they'll do it as they go through the process. I want to say that they will, because they're looking to have this prepackaged bankruptcy done in 4 months and be back publicly trading again. So last time I saw a bankruptcy that moved this fast, they didn't even get delisted. NCMI, they went through their bankruptcy. They basically did an extension with NASDAQ, and by the time that it came up for the extension, they were already out of bankruptcy. So they just didn't get delisted. They didn't even get the Q. That was that fast. So,
nice.
So yeah, that might be a situation here, because like I've been watching like the r/Wolfspeed, not the r/Wolfspeed stock. There's like a tier. There's like two, and one's the crazies, and then one's the like somewhat sane people. And there's been a lot of people asking about that. Like I know I've been coming to Platinum for help with some of that stuff, where they were asking about options trading, and Platinum had the deets, because she's been following all the different intricacies of some of this bankruptcy stuff.
This one picked up a following too, right? Like what? How did it? Like how and why did it pick up a following?
Because the chips Act.
Oh.
They thought, and there's a lot of I hate to use the term fake news. There's a lot of some bad DD going on because remember when I was talking about like these are they're a semiconductor fab and they make silicon carbonate stuff for more industrial uses. Well, people heard silicon and they're like, oh, they'll be making chips for NVIDIA. And it's like, no, they will not. That's not what they do. And so they thought like all these like high tech kind of like normal electronic stuff when really they're more like of an industrial base. So they have this like, they're not making chips for this AI bubble that's like desperately trying to pop. They're in a completely different sector. And so there was the CHIPS Act thing. It's a semiconductor company, and then people making bad conclusions based on that they were applying for CHIPS grants from the government that ultimately they didn't get because Trump killed the CHIPS Act before they could get the money. Which is why they saddled up all this debt that they're having to restructure. They got all this debt ahead of time thinking they were going to get the CHIPS money. And then, I saw the and then
that's what I was wondering. I kind of just looked, when I was looking, I didn't look at it really till today, and I just went to the balance sheet, right? And you can see long-term debt creeping up, and it's like, okay, I bet they leveraged up for something or expecting something to happen, and then you walk over the income
they got
statement.
that new factory, and then they leveraged up to pay for that, and
and that's the thing, like. If nothing else, through all this, that's why I'm just trying to teach people like how to look at all three statements, right? Because I think people typically just hone in on the income statement and look at EBITDA and call it a day. But if you looked at, if people had understood maybe the balance sheet and cash flow statement a little more, you could see the writings on the wall.
Some people don't even know that those are three different things. Just so you know.
See, this is why I personally prefer enterprise value, because then you get at least a little bit of the balance sheet. It may not be a perfect, aggregate for the balance sheet, but at least you're putting that into your valuation calculations when you're using enterprise value.
That's fair. Yeah, that's fair. I'm just too much of an accountant sometimes. So like for me, it's, I typically start with like debt to equity, right? I'm going to look at that to see how leveraged the company is. And like, because you do need some leverage. Otherwise, like, what are we doing here? And then, but there's ranges specific. Y'all are going to get shot tonight. So you need some leverage. And then you want, so then my first, but then it's industry specific too, right? So there's three, it's, 0 to 1, 1 to 2, and 2+ is the kind of buckets people put debt to equity in. And depending on the industry, like I'm okay manufacturing having more debt because it's capital intensive. You have to finance that stuff typically, right? Whereas like a SaaS or retailer, like probably not as much. But then when you look at, then I'll walk over and look at the current liquidity via like the current assets against current liabilities, and then the quick ratio against current liabilities, and then you look at the operating margin. Like those three pieces kind of tell me, can they even service the debt, right? Because like it's one thing to borrow, but you eventually have to pay it back, right? Or you at least have to make the interest on it. Which when I walked over from the balance sheet, the cash flow statement for Wolf, it's like you can see the last 8 to 10 quarters have been negative free cash from operating, right? So you're not, your day-to-day stuff's not bringing in cash, because what you want is your day-to-day operations to bring in cash that you use to turn around and invest in long-term activities like PP&E and all the kind of like you want to grow the business. So you'd expect maybe plus 100 on cash flow from operating activities, and then you're going to turn around and invest that like into like equipment, so negative 100, so you're flat, worst case on free cash. But it's here they've been doing the investments, and you see the only cash flow they've really gotten has been via debt or stock issuance. Right? That's a red flag.
Yeah. So I wanted to take a brief second. I tend to like Tony's evaluations because they're pretty conservative, pretty right on. I figured since we did the analysis of the balance sheet thing, we can take what he kind of had roughly what I think is a pretty conservative valuation. Then we can kind of look at where he's thinking about where the price is right now. And I don't know. Yeah. I'm kind of interested because like you said, like I
going to have
Apollo had been looking at this. Maybe if the price has a little bit more pressure to get undervalued and you buy the shares at a discount and you get through to the other side with this new equity, maybe there's something there.
Yeah. Who knows? And there's a lot on the balance sheet. If you could just wipe the debt, like, people's livelihood we're talking about.
Right.
After the reorganization, and we need to do some computations about enterprise value after the reorganization and what sort of multiple the plan administrator or the court process is going to assign to revenue would be around $850 million. And we know that in this industry that companies are often given a multiple valuation of 3 to 4x their revenue. So that would value the enterprise value of Wolfspeed between $2.5 and $3.5 billion. The company will still have some debt though. So from that enterprise value, we need to subtract the net debt. We get a then equity value remaining after net debt is subtracted of between $1.67 billion and $2.5 billion. And retail common stockholders would be expected to get between 3 and 5% of that, so between $50 million to $125 million. How does that break down to a payout in terms of dollars per share? If we take that equity allocation between 3 and 5%, between $50 and $125 million, and then divide it by a theoretical new share count of 125 million shares, very close to what the current share count is, we would get a potential payout, theoretically under this example, to common stockholders today in the new stock after the Chapter 11, somewhere between 40 cents per share and $1.
I think that one's pretty key because if I switch here to window, no, not that one, this one, boom. Currently, Wolfspeed is trading about like 41 cents, so on the lower end of that range. So, I mean, given we're still talking about a company that, like we said, if it gets up back into the range where it's not dealing with these where it's actually operationally profitable again, that might be a good steal. But like they're definitely pricing in the risk that this company is still not at a situation where it's profitable yet. So there's a lot, and the company, I think, even in its statements that it disclosed with the bankruptcy, doesn't expect to be positive again until I want to say end of 2026. So you're looking at a year of getting the shit kicked out of you.
Yeah, and there's like I get doing the multiple revenue. That's common in like the PE world, but like I mean, they're not. I don't know what's going on with the gross margin, right? It's like I struggle with that. Like if you could really get that kind of multiple when COGS is like for last year, right? I mean, gross profit's not even 10%. I bet well one time within that, but like I don't know.
Yeah. So you're thinking there might even be some more downside here probably before the price settles again, maybe on that like range window between 3 to 5%.
Yeah, I'd want to know if we're going to do EV, if we're going to do, and valuation's not my game. Like that's full disclosure, but just COGS is so high. I thought I'd be more curious if you anchored it to like EBITDA or something, right? Like what that multiple looks like. Because I think the revenue multiple assumes everything beneath it is operationally okay, which I don't know that we can make that case right now. But I'd be curious to run that under different ways, like EBITDA or free cash, or applying a multiple that way, maybe. But the guys, I mean, logically it tracks. Maybe the starting point was a little high for my taste, but again, that's not I'm a CPA, right? Not a PE guy.
Right. Yeah, because like that's kind of what I'm looking at here is like I'm still going to be watching this. I just want to I would like to at least hear the first day hearing, because that gives you a good idea from my experience of what the court's thinking, what the parties, even like the creditors are thinking about this company, what the situation is. It gives you a much better idea, and maybe, it'd be best at least to wait out this first week or two, at least figure out what's going on with this bankruptcy. And, I don't think this price is going anywhere. 40 cents seems to be, it's been slowly drifting down. So,
yeah, even their footnotes, they say due to the proportionally high fixed cost nature of our business, if demand is not materialized at the rate forecast, we might not be able to scale back our manufacturing expenses or overhead costs quickly enough. So to me, that speaks like I don't think you can do off revenue if if 800 is effectively almost breaking, they're not even breaking even, right? Like I don't.
They need at least 800. I think is their break. Well, no, because they were projecting 800, and that wasn't. Let me see if I can find that chart of theirs that they had all their financial projections. So, with a grain of salt, their financial projections. All right, let's be fundamentally clear that this is wishes and fishes, not actual like we know kind of stuff. Let me see if I can find where it was. Oh, that was too far.
That's why, like for doing that kind of stuff, it might be worth rerunning the value with a couple different metrics, right? Instead of just going off.
This is what
it a
they
day.
provided to everybody. Oh yeah, and it's our favorite non-GAAP.
Killing me here.
1 second. Do you want to explain like non-GAAP isn't bad in certain circumstances, but a lot of people abuse it?
Yeah, it's a good question. So there's only certain metrics that are quote GAAP, right? And like that's what the accountants say. These are the metrics, and they're going to be measured the same way everywhere you go. And so when you say revenue, it means this. When you say COGS, it means that, and it always means that. When you do non-GAAP stuff, you're kind of drifting more like the finance bro arena, where you're saying if I can exclude these certain things, here's what the GAAP equivalent would be. Which, if you're trying to sell a story, like I get it, but it always kind of raises a flag to me if they're touting out non-GAAP metrics, because that really to me is code for the GAAP metrics.
To be fair, this was also this was a cleansing statement that they included with the bankruptcy stuff. This was stuff that was only sent to the actual creditors. This was just released after the bankruptcy to be like, look, this is the stuff we talked about with them while we were trying to get this bankruptcy together.
Yeah, so to your point, there is a world where non-GAAP stuff is like it is a thing. Just being like a boomer CPA, like I always start with like this is garbage, and I work my way back. Like okay, yeah, this is reasonable considering what they're trying to do. Because there is circumstances where like okay, yeah, now I could see where I try to do a non-GAAP thing and walk it back. So I just don't like it.
So this is like the projections that they have, and it looks like they're expecting to. Okay, I'm trying to follow their math here. So end of even after the bankruptcy, they're expecting end of 2025 to be pretty bad, bro. They're expecting to bend back gross.
So FY27, they get a little bit of EBIT.
Yeah.
So that's basically operating ink. So yeah, they're saying 1,000 is their break even. Or
it's cash flow.
Billion.
So yeah. So they're expecting about middle of 26. I thought it was end of 26. Oh, it's because I was looking at EBIT because with their debt, so they're not expecting to have profits till 27. It looks like, yeah. And it's like they're looking at like for the whole year of 2027, like 18 million in earnings.
Yeah, and I don't like EBITDA for like manufacturing stuff because I mean depreciation.
Because you can't take out amortization and depreciation. Your entire fucking factory is depreciation and amortization.
Yeah,
equipment, yeah. Bro. That's how you're making your shit.
It's a thing.
Yeah. I know a bunch of people in finance that when it comes to like manufacturing, any sort of stuff like this, anytime they see EBITDA metrics, they're like, "That's what." You have to replace that shit eventually.
Yeah, I feel like I say this 3 times a week with my real life companies. I just can't. I go straight to free cash flow, right? Because that is the thing. If you're not generating it, you got to figure out how. But because I do most of manufacturing stuff, my consulting.
So yeah, this is their cash flow statement that they're looking at. I don't know if that helps you as far as when you were trying to look at free cash flow stuff.
Yeah, so what? Unlabored operating, we're getting positive operating cash flow. Estimated ending. Yeah, I mean, if they could just kept looking back at historicals, right? I mean, if they could just, that's the problem. The problem is this size manufacturing, right? You always need some CapEx investment because crap's always breaking and you got to
Right.
replace it, blah, blah, blah. But if they can, if you can get to 300-400 million of quarterly cash flow, that seems like you could turn it around.
Mhm.
Just a redneck opinion.
Well, that was the idea. Is like, of course, we're trying to make future, as it is in the stock market, we're trying to make future projections on backward-looking data, so we can't say anything definitive. But the idea was to just kind of put out there some sort of general ballpark area, not be like 40 cents, totally a buy. Go out and do it now, please. But just like, there's still a lot of downside risk with this company. But if like this price just keeps melting down, I don't know.
Yeah, I would say like for anybody looking at it to wait until the plan is
announced.
done. Wait until Apollo gets their shares. Wait until they dump their shares, and then maybe consider investing.
Well, they could dump them. That's a very likely policy.
They're definitely going to
after the bankruptcy and dump them.
Exactly.
Or they may hold on to them for a bit if they think that there's some value here. But like that's Apollo's big game plan is they look for pennies on the street and then they will stab a motherfucker over those pennies and turn them into nickels.
Yeah.
They are like cutthroat value investors, and that's why they make a lot of money. I think I saw a chart that Apollo's debt portfolio has over the past several years actually outperformed the S&P 500. So, hey, some people say value investing is dead. I don't know about that.
Distressed debt value investing.
Yeah, I know, right? The kind of high leverage value investing that you can't always do. Okay, so we do have a couple more companies. We're descending the rabbit hole rapidly now. We're going from company that is in bankruptcy, company that was in bankruptcy, company doing shitty financials and being very close to approaching bankruptcy as they try and hold their scam to get their oil scam. What's your word for this company, Platinum?
Which one? Nextbridge has no carbons?
Yes.
Nice.
So I don't. Had you gotten a chance to take? Okay, first of all,
I need some backstory here. Like, what? I haven't really followed this company. I don't get on Twitter much anymore, and I see stuff. I'm not touching that. Like, what is going on with this thing?
I'll let Platinum do the backstory because she hasn't talked or gotten the chance to talk.
There's
a lot about
way too much of a backstory. Okay, I guess we can go with the last 8K, right? Let's just go with like the latest bullshit. So they released. Is that what this is? The last 8K.
Well, first thing you should know about the let's go back
because they want to do this S1, which they're saying that they're only going to give it to accredited investors anyways, right? So it's not going to be like for the public. It'll be allegedly for accredited investors. They want to get this S1, this is what they're saying, but they've been trying to get this S1 effective since 2023.
Mm-hmm.
So
you keep saying return to sender, address unknown.
So they have these like back and forth going, correspondence going with the SEC. The last 8K, they talk about the correspondence with the SEC, and they say that they actually need to redo their financials for like a bunch of years, for I think 2023 and 2024.
They haven't even gotten us anything from 2024 yet. Like, we're going to go look at the financials of this company. The last ones we got was Q2 2023, and it's a restated 2023. They recently had to get rid of their last auditor because the auditor was investigated by the SEC.
Yeah. That one.
Just so you know where we're headed.
Yeah, like they're a complete disaster. Like this is some.
So
yeah.
Yeah, well, you're
So they're saying that the metamaterials, so the spinoff that they did with metamaterials, they have to restate like the Ora Grande assets. Apparently, they also
no
have
longer
to.
possess.
They have to restate. They did this like Wildcat property sale, and rather than doing the cash valuation, they did their estimated stock valuation for how much it sold for, even though like the stock doesn't trade or anything. Like, yeah, so they have to restate that too. And then there was one other thing, I can't remember, and I can't see this, it's too small. So
yeah, sorry about that. It's like welcome to SEC Edgar, where everything is small and your vision doesn't matter. I can't really. Oh, there we go. Does that help?
So the other thing is for the Wildcat properties, they put that in their income statement rather than putting it in their investments. Apparently, that was another thing that they did, which Jeff Davies said was.
I can already see his look.
so
The look on his face. It's great.
I'm doing it.
I'll be right back.
So they have a lot of issues, right? So they're trying to come up with their annual report, and they're just getting, back and forth basically from the SEC, telling them that they need to do all different things. Yeah, so that's what's going on there.
This one has a following too, right? Like this is a whole.
Yeah, this is the one that got halted.
It's a very dedicated bomb. I keep saying bombing because they've sent bomb threats. They've sent death threats. They
very dedicated.
What was it? Houston Wade's brother saying that they should send fake bomb threats and call them in by putting them in at all the airports and
Houston Wade's brother, who was on the board of Metamaterials.
Yeah.
What?
At one point. Yes.
Yeah.
But Metamaterials is now in bankruptcy.
Yeah.
And so this is for Nextbridge.
Mercifully, we did not subject you to the metamaterials stuff. But what I had gotten you on
this
is
just so ridiculous. I feel bad even telling anyone serious about this.
This tweet from Progressive.
Like about this stuff is I gotta be professional all week, and I gotta say all the finance things and be professional. But when I come on to here and talk about meme stuff, it's just like all bugger off.
So, I think this one was the original impetus about having you on again, because I saw this tweet from Progressive Libertarian saying, since MMTLP baggies are some of the most annoying baggies on FinTwin, I feel compelled to highlight how Nextbridge Hydrocarbons has issued beyond the time of writing down the obvious worthless assets. They are apparently committing accounting fraud by hiding interest expense via impairment charges in notes from their most recent 10Q 8 months ago. That was the restated one from 2023. That was 8. How you doing, Tony? You kind of started on the show there for a little bit. You missed it. We were playing your. Okay, so he had. Also, it was based on their projections. So, I mean, it wasn't like we were holding your feet to the fire on that.
No matter what, it's not going to be a great next 12 months.
Yeah, I know, right?
Like, let's just be real. If they get anything.
There's a path there. Like, if you give it time, there's a path there. But, yeah, capitalizing interest, that's a bold move, Cotton.
While reviewing the Q and the shareholder equity, a couple items caught my eye. One was the 500K warrants issued for consulting. Was that Johnny Tobacco? Probably.
I don't know what it was for.
Or maybe it was some of these Twitter personalities that have been hyper-reactive about people sending in whistleblower complaints to the SEC while having spurg fits on their space call.
Well, a lot of people are leaving Twitter now, too. I guess a lot of people are getting subpoenaed for the MMTLP situation.
I wouldn't be surprised, considering everything that's going on. About that 8K, we also had a post from Jeff Davies about it.
Here we go.
Yeah, where he had his comments on it. blaming the SEC. He said today in an 8K.
Yeah, they're supposed to be filed within 4 business days, right? And so they're citing March. Like, okay, we were told in March about this event, and they did it last week. That's when they filed that 8K.
So he basically said that he thinks that the SEC got wind of this posting. We're like, you're not going to throw us under the bus for your bullshit. You better fix that shit right now. The look on your face is priceless. You're trying to be a professional and you're watching this monkey shit.
Yeah, exactly.
This company that is like literally shit throwing on financial statements.
I mean, I haven't even heard. I can't tell you last time I've heard someone trying to capitalize interest. That's like something you do in your accounting class when you're in college. You don't know any better.
Well, considering they had to get a new auditing firm, maybe they didn't know better. They've got like 2 people. Well, they don't even. Do they even have an office?
They have 2 people, and they're both part-time. So like literally, they have like 1 full-time person. If you combine the 2 part-time people.
like this is like.
It's fun, man. It's fun. I feel bad people get that's my beef with a lot of the charlatan type stuff on, like, because people throwing out big statements. Like when you just look at the stuff financially, like you can tell it's heading a certain way, right? And then like people get caught up in it, and it's just like I feel bad, right? I feel bad for it, but it gets a little silly with some of these posts, right? It's like, how do people just read stuff and like
people don't read stuff. Nope. That's
trying to be nice here.
People are not looking at the actual. Like, I'm so grateful that you have like volunteered your time to sort of talk about like various things, like even with GameStop, with whatever else, because like honestly, I really have learned from you and other people too. And so like I appreciate that. Like even with Tony too, like I've learned from him, I've learned from Corex, I've learned from Amy for sure. But like some people are just not willing to like learn, right? Like they're just not open to it, you know what I mean? But like it really does help you make money, honestly. Like in the end, it helps you make money to be able to understand like what's going on.
Yeah, I appreciate that, because most of my career I've worked for like distressed companies, and there's just a theme to it, right? And so like, and what I've enjoyed about accounting is like the logic has to track. So if you start at a high level and kind of work your way down, it's got to just make sense as you go down, because a lot of the gap rules stuff does get complex, but at the end of the day, you got to be able to explain to someone off the street, right? If there's too much debt and if I got this and I got that, well, then there you go, you're in trouble, right? So that's really been my main thing, is trying to get people to anchor on just, if you don't understand it, start at the high level on the balance sheet and kind of work your way down, right? Because at the end of the day, everything converts to cash, right? So if people are playing games or doing this and that, you're going to catch it via the cash flow statement, the balance sheet, because if it's gray or not great, then you're not going to be able to get that cash back out of it from the company standpoint, and then that's when the problems start unraveling, right? Because they can't pay their bills. So, but
it's predictable. Exactly. That's the thing. Like it is predictable just based on the numbers. Like it's not even like trying to FUD or whatever. It's like just predictable based on numbers.
Yeah, and then like it was like years back when I was doing those bed bath posts on Reddit, the company the flat out telling you like the GAAP requires us to tell you the risk here, and it's like there's percentage basis for all that, and then there's this, and it's just if you're dealing with a bunch of accounting nerds who put the numbers together, you're probably walking down a path, right? But it's an education thing, right? I think more of this stuff should be taught in school, but
right.
To be fair, I did get a year of high school, like 101 accounting. So,
Oh, really?
Yeah, it was offered in high school. I was like,
yeah, I was too busy with like photography and
they
like
made us have to
like,
do the accounting on pen and paper first before they let us do the Excel, because that was always the part that tripped me up. All the numbers eventually run together. It's like, can I just put it in the computer, please? Like, no, you have to know how it works first.
Yeah, that's that's the thing I appreciate about my early years in accounting, like having done the debits and the credits. Like, if you built it up like literally from the ground level, then it's made me better in the sense that when I walk into a company, right, like I know how to like roll it up and roll it back down, right? So, but for the average investor, just knowing how to read a balance sheet statement and a cash flow statement, you would catch 90% of it, because 9 times out of 10, the games are going to come full face in the cash flow statement, right? Because I can time stuff and make it look weird and then go sell that story to the news, right? So,
so if I remember right, like not before this show was not the only time I had shown you the MMTLP stuff. I think I showed you one time shortly after your first appearance, and you looked at that and it was like, this is a disaster. It's like I think your statement was exactly, this is bad.
They're still around, honestly. It's crazy that they're still going. I mean, they had $147,000 in cash in September of last year that they reported, and $5 million of debt. So, like, it's kind of like, how are they even going to afford an audited 10K at this point? I have no idea.
They've gone a whole year without a 10K.
That's impressive.
And they have to redo their financials for 2023 and 2024. They have to redo them all because they wrote off their assets, because they lost their leases. They lost their oil and gas leases, and they wrote their assets down 100% for like 2023. And then the SEC told them that they should have wrote them down for 2024 instead. So they have to redo 2023 and 2024, which, I mean, that's expensive, right? So
yeah,
like, good luck with that.
Yeah, God, I don't know where to start with that. No,
yeah, right. It's just bad. Like, how much does it cost, do you think, like, for a 10K for a public company?
Oh God, it really depends on the auditor and the size of the revenue and the size of the company. Like
we don't have to worry about the company being too big.
Yeah, I mean, so there's 2 part-time people, but there are potentially, like 50,000 shareholders.
Hey, maybe they can find an accountant amongst them to do the books for them. They do it probably for free.
Yeah, because I'm just writing stuff down, writing your long-term assets down to zero. I'm like, okay, that's probably not right.
Yeah.
But no, I do think it's interesting. I feel bad because, like, it's like real jobs at stake here, right? And people lose jobs, but it's kind of like it's just genuinely more interesting when these companies go bad, because it's like Dateline, right? The stories are just bad. I don't like stories where people do well and have a good life. Like, okay, cool, but like those aren't the ones they're making Dateline about, right? It's about where there's a triple love triangle across 3 states. That's a crap you want to read about.
We're about to have one of those Dateline ones. Our fourth company is going to be extra good. If you've seen the thumbnail, you know that there's only one left. I've got a couple other like little scurry things, but like, yeah, this is the last of our main 4. You want to take a guess which one it is, Platinum? What company?
I didn't see the thumbnail, so I'm not sure.
Well, we've been talking about it a lot recently.
I mean, it could be anything.
Okay.
We've been talking a lot recently. Oh, Lordy. Cheers. Cheers to Delusion.
Platinum, do you want to get some background?
Do you know anything about this company, Quantum Biopharma?
This is the first time I'm seeing this.
Oh my goodness.
I've been on social.
So we have a financial advisor on Twitter that was paid.
He's now a paid consultant.
Yeah, in stock to pretty much like pump this stock, right? So they have not only been, given shares themselves, 30,000 shares, but they've also bought. Yep, they've bought 500,000.
I like to look. It's like I should have saw that one coming.
Yep, for their clients.
Yeah, he's
also they've never had any revenue whatsoever, not even $1.
Okay, sounds a good start.
Right. Off to a great start.
God.
So to get us up to speed on a timeline working back, So he was paid. He has like, I think 3 troughs of payment based on getting them to, I think it was 1 for his promotion. The second trough was getting them to where they could sell 1.5 million off their shelf. And then the third trough of shares is for selling off them, getting to a point where they can, of price of, market cap, where they could sell their entire shelf. And those are his 3 tranches for payment. He's now bought, what is it, Platinum, 17% of the fucking float into his fund. So he's using his own investors as fucking baggies to get his money. Yeah, exactly. That is the exact look.
A registered financial advisor. Okay, this is. He's literally bought like between $19 and like $21 per share. 500 and something thousand shares in the past few weeks to pump his own bags, I guess you could say. I mean.
So then we also got news that came out apparently that, now this is a new one by me. I've heard of, I've heard of insiders using puts to hedge their shares. How about shorting the company?
So it says short sale now. So I'm like the only person that has said that I think this is actually just a regular sale, and it says short sale because it's like short-term capital gains.
Okay, so it's like if I bought a short-term position on Fidelity and shortly sold it thereafter, it is
sold it within a year.
Yeah. So for tax purposes,
so you can see where he exercised the options, right? And the same day it says short sale, which
so they got exercise the options and then immediately sold them.
Right. Like I guess it could be a short sale, but like, is it? I have no fucking clue. I think it could also be, in my opinion, a regular sale that was short-term.
Either way, it doesn't look good if you're immediately cashing in your options and then dumping them on the market. If you're an insider, just saying.
Yeah.
But yeah, not exactly what people were saying. That is a definite possibility.
Also this company, so just so you know, this company also has like one of their only products is this drink called Unbuzzed that is okay.
Hey, Platinum actually
I love how you're
for us
laughing.
live on stream.
I literally drank it live. And then you should see my face at the end when I realized that it's 200 milligrams of caffeine in it, and it was like 11:30 p.m.
Oh my
like,
God.
oh shit. I'm like, okay, so that's why my heart is like pumping out of my chest. Got it.
Then there was the former shareholder, former CEO of the company, took out a home loan with company assets, used cash off the balance sheet, and basically got a loan from the company to buy his new house. Great story. At least they this is the one thing we have all this stuff about this company, because at least they're disclosing it. We get to see they're still turds, but at least they're telling us about the turds. I guess that's better than some of these companies.
It's the point of disclosures. You can't hide the turds, right? You got to come out with that stuff.
Yeah. So I mean, at least it's that. Then we had, what was it? The most recent offering of shares that came out.
Unbuzzed. That's the drink. So it's meant for if you're drunk and you drink it, you're supposed to be -3 drinks after you drink one of these drinks. That's the math.
What really it is vitamin mega dosing and a bunch of fucking caffeine.
And a lot of caffeine. Right.
Sure, the science holds up on that.
Well, yeah. And so they had an offering that they were doing, a Reg D offering.
So this, I think, is actually, this Unbuzzed is a subsidiary of this company, and
they're trying to spin it off as an IPO, right, or something like that.
Well, I think actually yes, because if you look here, it says that they're engaging MZ Digital, and then also some other Dealmaker platform, which I looked up the Dealmaker platform, and that is for companies who want to get funding, basically.
Yeah, I played around with that.
Yeah, and
so I think they are trying to get funding, not through Quantum, but through their unbuzzed stuff.
But the problem with that is, like, as we've discussed before, the whole like patent on that entire drink and everything is kind of in question. With
the
whole
drink lab
patent
versus
dispute.
Mm-hmm.
So there is a dispute that the drink lab claims that they stole trade secrets to create their unbuzzed product from their product that they had already marketed after a deal gone south. And everyone is angry at everybody. There's even cross claims. And on top of that, their most recent filing shows that there was a discovery dispute that was resolved. So nothing too much happened in that. But like, it's really hard to IPO a company if the product in question is disputably even yours.
This will make a great Dateline. This is so good.
Yeah, kind of would.
If only.
Well, it really actually would if you like look at the lawsuit with the like the old CEO and stuff. And,
Oh, we'll
like,
get to that.
because that's really funny.
So we also found that the new CEO has a whole list of shitcode tickers that he's.
Oh, the new CEO who blocked me already on Twitter.
Oh, nice.
We'll get into the lawsuit about the old CEO. Let's get into this. So Platinum found the actual, not the Canadian one, but the old CEO tried to overturn the Canadian arbitration by coming into a U.S. court to challenge the Canadian arbitration. Think for 5 seconds about how well that went for him.
Oh, it went great. The judge is sassy as hell too, so it's super funny.
This is the best line ever, by the way.
Yes, he cites South Park in the first sentence.
This judge should have, well, he does have a life and time appointment. He's a federal judge, but this judge should be on the Supreme Court just from that line alone. It seems everything's gone wrong since Canada came along.
That's from the Blame Canada on South Park. Bigger, longer, and uncut.
Needless to say, the federal judge in the Eastern District of Pennsylvania said, "Yeah, no dice. I know it sucks that you're having to pay $2.5 million, but you owe it. Have a nice day." But the plot thickens because, okay, when I first heard about this that we're going to get into right here, I thought it was only about the most recent litigation. I didn't realize it was the $2.5 million from that and this current litigation. So let's talk about this. I'll let you handle it from here, Platinum, because this is kind of your story and the question you asked him before getting blocked.
Well, yeah, this is why me and Ocelot ended up being blocked, right? So Ocelot said, he made a post, a lot of hype around this ticker, and they have a new amended complaint for their market manipulation lawsuit. But looking over the filings, there's an interesting disclosure that in exchange for $1 million, a Sports Coat LLC is entitled to a portion of the ongoing litigation, including the market manipulation litigation. My questions are, 1, what portion of the proceeds is Sports Coat LLC entitled to, if there are proceeds? And 2, who is behind the LLC? And then I responded to that and I said, great questions. And then I tagged the CEO and I said, will you be transparent and answer this, please? Literally, we both got blocked right away.
Well, it doesn't even say some proceeds. It says, as consideration for the purchasing proceeds of the litigation, which includes any of the following. So this seems to imply it's all of it. So this brings us to another point. So not only did they get $1,000 and then give the like 2.5 million or whatever that they got from the former CEO. So they paid $2 to get $1. Plus whatever comes of this new litigation where they're suing for market manipulation and spoofing and, the West Christian shit. So like divide by 0. But at the same time, because they also came up with a scheme that they're going to pay a dividend. This was another thing that Kevin Malone was promoting.
Oh yeah, the dividend.
They're going to pay a dividend. Yeah, dividend for the proceeds.
Have you ever heard of that? A dividend based on the proceeds of a lawsuit? Like, how crazy is that?
What?
Yeah, exactly.
I've
Which
never heard
which
that.
then the defendants put in their filing in the response to motion dismissed. Like before we recently, a couple days ago, they created a new security where the proceeds from this lawsuit are going to shareholders. Does that not sound scummy to you, Your Honor? Which
Yeah.
also, scummy as it is, they've already committed the money. It seems like all of it. Maybe I'm reading it wrong. To Sport Code already. So are they just like taking their shareholders for a ride by saying, yeah, you'll get a part of the proceeds. Too bad we already committed them. So your part of the proceeds is zero. Have a nice day.
It kind of feels like a tactic, right? Like I haven't heard of paying a dividend out of a lawsuit proceeding. That's a new one to
I
me.
know,
But,
right? That was new to me too. I was like, whoa, that's something I've never heard of. Like, holy shit, go. Here we
call me
go.
old school, but typically pay dividends out of earnings, right? But
You know what? Hey, listen, I'm studying for the SIE, okay? And
hey, the revenue from the lawsuit is probably their only earnings. So, you know, or revenue.
okay, that's if they get
One
if they get
time.
any proceeds from this lawsuit,
Right.
which I don't know. I would say not looking good.
yeah.
But according to this study guide for the SIE, you know, it doesn't say anything about paying dividends through potential lawsuits. You know, it does say something about
They're going for
and that's how they.
novel dividend use cases, I guess.
Well, yeah, when you have zero revenue,
So they haven't sold anything? Like
they literally have like a dash for the revenue on macro trends for years.
Well, we can look at the we got the sheet right here. Let's go take a look at those. Let's take a look at them financials. This is the last quarterly reports. Where is it? So let's look at the balance sheet here. This is the one where I accidentally read the wrong line entry and thought shareholder equity was negative. So maybe you can explain this jumbled mess down here for us first on the shareholder equity.
Oh God. So they got multiple levels of stock. You got some warrants.
Oh yeah, so the
Accumulated
Class
deficit.
A shares, like the CEO owns some. There's like
Oh yeah,
270 something thousand votes per share for those.
a really great sign.
Yeah, and the CEO and like another board member owns those.
And they paid $600 for the 6 share. What was it? 12 shares that they got, 6 apiece.
Well, they consistently buy more. So what happened was they diluted the floats, so they had to buy more of those Class A shares in order to keep their like voting percentage the same.
Right, but like you would think if you really believed in the company, like why are you spending only $50 a pop for these super? Like I get the premise is that they're just trying to maintain their control over this scam, but like, does it not look bad that you paid $600 for these?
To who? Like, look bad to who? Us? Like, they don't care. We're not their
Just
target.
anybody, nor any normie in general, any schmuck mark on the street that actually looks at this stuff.
That's not their target.
Oh, that's fair. That's fair. That's not smart people are not their target demo. That is correct.
Not even smart, just like anyone looking at it, not their target.
Yeah,
But
so
you
I
were
think
talking about the what was it? The accumulated deficits.
Yeah, that's the one you want because you know, if we go full nerd, right, it's assets equals liabilities plus owner's equity, and so at the end of the day, profits or losses flow to the owners, right? So when you have losses over time, that gets closed out to equity, so it reduces your equity in the company. So really, when the equity portion, I typically look for how much equity there is against debt and assets, all that good stuff, and I want to see like, do they have accumulated losses on here, right? So when you see accumulated deficit, and that number's getting bigger, that means the losses are actually pretty substantial at this point, right? And they're growing year over year, obviously. So, yeah, equity is the main thing. Yeah, typically don't have people spend too much time in the equity section. You're going to look for equity as it relates to the debt and assets of the company, and then you're going to look at this accumulated deficit or retained earnings section to see kind of like just give you a quick gauge on how the company's earnings have been over the years, right? If they've accumulated about one way or the other. Terms of earnings.
So that whole accumulated deficit is they've lost 172 million over the long term of this and get fucked.
Not great.
It's not great. All right, but let's talk about what all the baggies like talking about. This whole $6 million in cash, guys. They're doing so great. So what do we talk about? Assets that are just sitting on the balance sheet doing nothing. They're not being invested back in the company or anything like that.
Yeah, it's so if you crack open any corporate finance book, they're going to tell you having too much cash is not a great thing, right? Because you're not doing anything with it. So like most companies, because you're not getting a return, right? Because like ideally, I can invest these funds back in the company and earn a return greater than what I can go out and just buy bonds for, right? And if you can't do that, that's a whole separate conversation. But I'm guessing they issued if cash doubled over the year, they did some sort of issuance. But regardless, yeah, having
Go look at
six.
dilution tracker. It will really open your eyes to how this this has been working.
This is me just doing this live, so always double check me. But if cash jumped that much and they're running a loss, and they had to have diluted, I guess. So, but the half of having total cash of half of my total assets, a little concerning. Finance
Especially when you've got
receivables.
some of these, like you look at the liabilities that are offsetting over here, like
Yep.
trade and other payables is like almost all your cash position.
Yeah, that was my next thing. Yeah, you're tracking. So if you go back up a little bit on the current assets, one more thing. So like finance receivables. Okay, so they did collect some of that. So okay, that would explain the pop in cash. Like so when the receivables go down, that means you collected the cash, so that tracks. Investments went up. They got some inventory, digital assets. It's probably some intangible
Bitcoin.
stuff. So
Yeah, they have Bitcoin on their balance
Oh,
sheet. We figured that out last
That's
show.
a new thing.
yeah. So if I look at this just on its own, like they collected a bunch of cash from 23, so that cash popped, receivable went down, their other receivables is in line, so that tracks. Investments, that all seems okay. But then when you walk down to the current liability section, that's almost entirely. So when you look at current ratio, which is current assets over current liabilities, and that lets me know that's more of a liquidity issue, right? Because like debt to equity is a solvency thing, right? Like, are you really underwater on this company as a whole? Liquidity is just can you pay your bills, right? So depending on the industry, like most accounts will tell you like current assets over current liabilities, you want like a 1-to-2 ratio, right? So $100 in assets over $100 liability. Yeah, so
I
cash
thought
off
this
that
was
much.
the most recent filing.
Hey, do
Did
we
I
have
miss
most
that?
recent? Can we pull that one up? I'm curious to see.
Let me see if I can find it because I could have sworn. Now this is a foreign company, so they're kind of like weirdly filed on the SEC. But I could have sworn I'd grabbed the right one.
So they got 4. So current liabilities, yeah, I'm curious to see the first one. That is within line, so I'm not super worried. And then total liabilities is 6.6 on 17.1 of assets is actually pretty decent,
Should
but
be
the huge
2AF.
loss year over year is concerning.
Said 514. Report of foreign issuer. Oh, so they hid it under a report under foreign issuer. That's that instead of reporting it as a 20F, they reported it as a foreign issuer.
Well, isn't the 20F like our 10K?
Yes. Well, or 10Q. Like it's weird. Foreign issuers.
So the 20F
only
is not
have
the
to
annual
apply.
report?
The 20F can be like it's as a foreign issuer, you're only mandated to report every half year. So your end of year and your half year. So like you can report quarterly like a normal business, but like as far as foreign issuers, the rules are a lot looser, and I kind of find that's why there's a lot of shady foreign companies. But like they filed this as a 6K and then buried this 20F under it. So there you go. Here's the updated financials, like Tony said.
Thank you, Tony.
Yes, thank you very much, sir.
Okay, so
They got more Bitcoin.
so many.
There's where all the cash went.
That is where all the cash went. It's true.
Yeah, literally, right? So, just off this is me just doing this live, so double check me as always. But like, yeah, total assets or total current dropped was about 2 million. they showed a bunch of cash in the digital. The finance receivable is kind of low, so I'm guessing sales maybe were down. My receivables haven't jumped back up. Intangible, that's pretty high for.
Looks like their warrant liability also went up for warrants and their derivatives and notes payable. Because I
Yeah, so
remember
now you
those
can
being lower.
see. Yeah, and I appreciate Tony providing this because now you see like total assets of 14.8 against 10.3.
Yeah,
There's
you're starting to see
tighten
that they're
up.
moving insolvent. Oh wait, no, wrong. I was looking at current
Liquidity.
assets versus, and again, looking at the wrong lines here. So yeah, they're.
No, that's
But
true.
did it compress down? Let me see here. If I've got
Yeah, I think it was like 17 in assets against 10 in liabilities. The other one you had, I think.
So I have a question for you. If they're collecting royalties on something, where would that show up?
Are
So
these?
yeah, their net assets dropped by 3 million, and their net liabilities went up by roughly 3.5 million.
Okay. So just tightening. That's a good question. So if I have royalties that I'm collecting, so if I have a sales, if I have a royalty of $100, then I should have accounts receivable of $100. So I would see the offset to a sale is either to accounts receivable or cash on the balance sheet. So you would see the increase there. If we go down to the cash flow statement, probably tell us a little more about the ins and outs of that.
Okay, because they own. What happened was they like spun off that unbuzzed company. They own 20% of it, and they're supposed to be collecting royalties on every sale until they get $250 million.
Mhm.
But I'm just not sure
Here we are, cash
where
flow.
they're putting that.
So if the royalties aren't part of their core business, then that would flow through below the line, right? Somewhere in other income, OCI. I hadn't done technical accounting in a while, but that wouldn't be revenue. That'd be somewhere below the line. And then the offset would be some sort of receivable. So I can look at that after this call, though. And I'm kind of curious now.
Well, because that's what
Okay.
they get for their unbuzzed drink, right? And so
Yeah.
when I bought that on Amazon, I'm like, okay, so where is this even going?
Yeah, I was thinking, so
Yeah.
if they had a side business doing something, that would be if they sold something and their part of the sale would be to like other income, I'm guessing, and then the offset of that is to cash that you get from the subsidiary or accounts receivable, like you're going to get that cash eventually.
This is
If you
the
go
weirdest way
back
to do
down to the
revenue.
cash, let's go to the cash flow statement real quick. I'm curious.
Yeah.
Um,
That's it right here.
okay, yeah, so they did have a big net. So you start with a net loss because what you're trying to do here, for people who don't know, you're trying to walk the change in net income to the change in cash position because accounting is such that since it is an accrual basis, which means I recognize expenses at the time of it occurs, not when cash changes hands. I need a statement that walks. I have $100 in net income, but I somehow my cash went down by 200, and you have this statement walks those changes. So the first section is operating activities, and that is kind of what it sounds like. This is your true day-to-day stuff. So you start with a net loss of 8.7, and then I'm going to add or subtract all the non-cash items and activities to get back to what the true change in operating cash is. So you start with an 8.7 loss, and the cash flow out of operations only a loss of 4.2. They had a fair amount of like non-cash expenses, right? Because like for depreciation, those kind of things, you don't write a check for depreciation. So that's a non-cash expense that gets added back here, right? So the big thing here is, you had that change in fair value derivatives liabilities. That's 3.1. You add that back. The loss on debt is 1.5. They add that back. Then FX loss, you take that out. So what I'm looking for here is like the big ticket items to see if it's one timer, if it's recurring. You see some one timer things on here. When those fall off, then you're just going to be left with a net loss and minimal ins and outs. So then my net loss would be effectively for most companies like you're changing cash, right? Or closer to it. So when you go down to the investing section, so yeah, they purchased some Bitcoin. So then that's a cash out because you change cash to something else. So that's a negative. And then you come down to the financing section, they raise some cash, but yeah, like convertible. So then that increased cash at 3.1. So I'll just say the net change in cash for the period was a drop in 2.5, which that tracks what we saw up top, right? Because total assets dropped.
Yeah.
That tracks. Okay. Yeah, so all I had to say, like operation, that sounds tough if you're starting with that big of a net loss, right? But the balance sheet isn't. I mean, it's tightening up, but operationally, if you kind of figured it out, you could right the ship, so to speak. But I do have some concerns about that big of a loss on only 14 on this much assets. Losing that much is a little concerning.
Which is probably why they're trying to get ready to unload yet another shelf and get the. Let me pull back up dilution tracker here and see if we can. I can show you what the business end that they've been giving their shareholders. Here we go. This is the graph chart for the dilution historical.
Because isn't it always? Here we are.
Here's the cash position. I think that pretty tracks with what we've been watching.
Yeah.
Then we've got the warrants. We've got the December 2024 warrants in 20, and then July 2020. We've got a series of convertible notes, three ATMs, excuse me, and 3 more shelves. So I mean, they got some shells loaded in the cannon.
There are some concerns there. Finally,
some concerns.
So nice.
Some concerns.
There's some concerns there.
I'm concerned with this. Now we're going to like some of the junior varsity stuff I was looking at. This shouldn't take too long, and then we can get to our normally scheduled laughing at Aggies stuff.
Oh, God.
Yeah, I got about 10, 15 more minutes. I probably got to take my dog.
That's fine. That'll wrap us up, and then me and Platinum can finish out the rest of this. But did I delete too much of this? I bet I did. Well, we'll open up with Tony because he kind of was the key lead in on why I was following some of this. So
you piqued my interest. What baggy stuff do y'all have? Like I'm curious.
Well, we've got some stuff dealing with, of course, like we mentioned, like the Bed Bath and Beyond, and then there's a couple other things. This was the balance sheet that I think I showed you because it was the most. Whoops. Let me stop this and then redo it as a. There we go. Because this was the most pathetic balance sheet / earnings.
Oh God, is this GBUX? Jesus.
Yeah, it is. So
this is another
notice here there's no, in thousands, in millions or whatever. Just look at these numbers. They're raw.
It's raw?
Yeah.
Mother of God, what do they do? Related parties. Oh my God. God, I love this. I love accounting so much.
You wanna look at the consolidated statement of their operations. Remember again, raw numbers.
Like that G&A 3 times revenue. That takes some effort. Interest expense 111. God, why do y'all do this to me?
You're
hurts, man. It's physically hurts.
Listen, this is what is being pumped on Twitter. Okay, it's not. Don't blame.
Yeah,
us.
we don't do this to anyone.
Blame Ham the short killer. Okay, blame the pumpers. Like you know.
Oh, this breaks my heart.
Yeah, this is how it ends up on our radars.
Because like we hear about it, and then you get a look at these. Here's your favorite, the cash flow statement.
Love a good cash flow statement.
This ain't a good cash flow statement, let me tell you, though.
No, I love starting with a big net loss. It's about to get good. So they had some fair amount of add backs. They didn't lose. It wasn't as bad. But then you go down to financing, proceeds from loans. Yeah, that tracks, right? You lose a bunch of money operationally, then you got to go borrow it. Got you lit it on fire.
Yeah, because again, we go back up here to the balance sheet, and they literally have only $17,000 on book in cash. When you're losing, like, what was it?
$500,000.
Jesus.
So they got like 2 days of cash on. They got like 2 days of cash on hand.
Oh yeah, they are super scared, Tony. They definitely are. Look,
scared.
Tony
They're in shambles.
brought this to my attention when he was posting about it on X because they were talking about what was it that they were offering again. Okay, you
Let me
thought
guess,
that
that's
giving the
stupid.
proceeds from a lawsuit was weird. How about giving a dividend that is a warrant to shareholders? So not only are you diluting them, but you're obviously as what we've seen on the balance sheet, but you're giving them a dividend that is literally you have to pay the company money to execute the warrant. That's not a dividend. That is theft. And that's supposed to scare the shorts? This fucking warrant? Like, this has to be the biggest. You know what? I'm kind of fucking impressed. That's a fucking hustle. That's like, I feel like, why am I not in the business of doing this shit?
Oh my, half their convertible debt is in default. It just keeps on getting better.
This is great. Oh my God. Tony, like, you're too nice. How can you talk about this stuff with a straight face? Like, I know it's not you. I know you're not promoting it. You're just like us. Like, this comes up on your radar. People talk about it to you. It's just like, anyway.
Well, that's nice.
We're out of the shitco storm, I think. I think I wanted to get your opinion on this before.
So rough.
Yeah, pay the warrant to dilute yourself. Exactly. When I saw that, I was like, what? How did they convince people this was a good idea?
Shareholders in shambles.
I know, right? Oh my God. Before you take off, though, I wanted to give you your opinion on this. And I'll let Platinum take the lead on this because it is her Twitter post and it is her reporting about the most recent extension of the.
Oh, yeah. So this
notes.
was in addition to the original note offering. They took the extra $450.
Oh, I've got one more after this, depending on how long you can stay. Trust me.
Well, that's
well, actually 2 more because we do have Mullen again in the lineup. If you really want to talk about, I lied. We're not out of scummy shitco territory. I'm sorry.
Man.
I got you to the eye of the hurricane. The storm is just ahead again. But anyway, sorry, Platinum. Go ahead.
Oh, nothing. This is just the convertible notes, and GameStop issued the additional ones, so they have $1 bajillion and no plan. Good times.
I didn't know if you had any thoughts from an accounting standpoint. This whole Bitcoin.
Yeah, what do you think about this whole thing?
Like Bitcoin.
I was kind of shocked that they were able to get so much money from this, but apparently there's a lot of interest in it.
Yeah, I'll admit, doing debt and equity type raises, I haven't done a lot in my career, so take it all a grain of salt. To me, when I saw it, my immediate question was why?
Right?
What are you gonna do with it?
Exactly. When they haven't even used the first one.
Yeah, because I haven't looked at their numbers in a bit. Let me just pull the quarterly up again, because I think operationally, right, it's still struggling. Right now.
No, they actually were operationally. They made a little bit of income last quarter. Believe it or not.
I thought they only lost a little bit. I can't.
Oh, well, so it was if you they had something due to some closures, so it was a higher
because they had to terminate the leases when they closed them or whatever.
Right. So they were saying if you minus that 34 from that or whatever, it ended up being positive or whatever. So
which I was really surprised about because usually the quarter right after the holiday season is that, and I think second quarter over the summer is their 2 dog days of shittiness, and then third quarter's not bad, and then fourth quarter's their only profitable one usually.
Okay, Tony, this question about the narrative that since they're convertibles, Jimmy that's just completely wrong. That's not how it works. That is considered debt. So you would minus that from their cash to get their net cash. It's just numbers. That's just how it works.
Yeah, that one confused me. I'd seen that bandied about. It's no, that's Like, first of all, just basic accounting practices, assets equal liabilities. But anyway,
Right. Like they're gonna pay it off in shares, which like
is
is
bad for all y'all keeping
Is this-
track at home.
the same as cash, right? So it's like
Yeah.
it's debt.
Yeah, so to your point, they had 35.5 asset impairment. So if I add that back, then operationally, yeah, it would have been slightly positive, which is an improvement. But I mean, I think my last post I wrote after was it 2 years ago? My big thing was just like, what are we doing here, and like, what's the
Right.
direction? Because it's
Yeah, like what are you gonna do to increase the top line revenue? I remember you asking that like literally like 2 years ago, and it's still the same question.
I'm a simple man with simple questions. Like, what are we
It's the
doing
same
here?
question.
So
It's the same questions me and Platinum keep having. It's like there's things that
Right.
you could do
It's a good
that
question.
could literally help the business, and you're just nothing. Is that what we're going with? Okay.
yeah, because like just my view of finance's role in organization is, you're kind of the mom. Like if I'm CFO or something, I'm not gonna hit the brakes on stuff, but I'm gonna be there to ask the questions like, what are we doing here? Like, you said you're gonna do X, you did Y. Like, why do you think is it temporary? Is it one time? Like, what is it? Right? Try to figure out the why of all this, because the numbers on the page, they do mean something, but it's the story behind them, right? So that's my big thing is if I go back and read the original letter and what he threw out, like it was very clear about revenue and all this stuff. And it's just the story shifted so much over the last few years. That's why I've kind of stopped talking about it, because I've just taken so much shit over pointing that out.
Right.
It's like, revenue. Like, yes, if you get to, if I said like 3 years ago, if you get to zero operational income on reduced revenue and you close all the stores, what is your next move? And if you're a retailer, the playbook is you go digital or you open up more stores. Like, well, you've had to close a bunch of stores. So what are you going to do? Right. So that's,
Yeah.
but in terms of the balance sheet, right, there's like more cash than God is on here now. They're still, they got a little bit of long-term debt. Like, okay, sure. CapEx for me is just wildly low. To me, that speaks to like, again, if I'm looking at balance sheet management, and I see that a company's not investing in CapEx, then that tells me that they don't even want to invest in their own company, right? So, because this is just as a percent of revenue, like this is so low, and it's only gotten lower over the years, right? So, just for me, it's directionally, I have questions, and I just hope they figure something out besides Bitcoin, because
Oh
I
my God,
do
same.
like the stores. I thought I was genuinely excited years back for the transformation and growing the thing, and I enjoyed gaming and all that stuff. I was really excited about all that, but I just haven't seen anything in years that said like, okay, we're doing this.
Mm-hmm. Yep, I
But
agree.
so
So
it's more of a missed opportunity than anything, and that kind of hurts because it's all the pieces are there. I just don't,
Right.
So
apparently, after all the dilution, all the cash collection that's going up against TJT is going to spend that cash on the balance sheet to do a share repurchase
buy
and
back
push back
shares.
up the price so that
Like-
when the actual DJT wants to sell, that he'll have taken in all the money from shareholders and they can sell his shares at the inflated buyback
Is this
price.
not like a Bed Bath and Beyond situation right now?
Well, it's not, because they even though they have no revenue, they have a fuck ton of cash on their balance sheet, if I recall correctly,
Oh,
and
do
their
they?
burn rate is minuscule
yeah.
because their
But
business is
isn't it from selling
non-existent.
shares in the first place?
yeah, it's from selling shares.
Right. So like they're gonna buy back their shares that they like, and that's what I don't
Well, they
know.
sold it. They sold shares high. They're gonna buy them back low. It's like,
I mean, yeah, I guess fleece the shareholders. Amazing business strategy. Seems like the ones we have, except they're being a little bit smarter with the buyback.
Yeah, I feel like Bed Baths, when they're repurchasing shares, it was more to try to like, because the business was struggling, right? But there was a business. Like, I don't know this thing still doesn't have any revenue, right?
No.
Yeah.
To me, that's the big difference. But it's the same principle, right? You're trying to pump up your own stuff, so you're going to do a buyback, as opposed to we're doing a reinvestment, because you could just take that cash and dump it in CapEx.
They talked about buying out, I think, one of these like crypto exchanges, and they're talking about doing like Truth Social Plus, like they're going to do like some streaming with like right-wing personalities on the site, but like As far as I've seen, it's a lot of talk and no action.
Gotta love it. It's so good. So good.
Yeah. The last thing we have to talk about is our favorite talking point, and it's Mullen. The main story being we're on reverse split number 4 for the year.
Are you the one that's posted? I thought a while back I saw where if you invested like $1 billion, you would now have 7 cents kind of thing.
Well, we talked about it last time that if like this is Sean Williams, a different Sean, but like there's the actual share count if you spring back all 7 so far, soon to be 8 reverse splits, 10.25 quintillion shares. I think we looked back all the way back at the peak for Mullen. I also got corrected that Mullen is one of our favorite reverse merger, like the reverse merger game. So technically, the peak that we looked at way back is.
Do you mean reverse split?
No. They merged into another company and then became Mullen.
Oh, okay.
Yeah,
Mm-hmm.
But like here, let's talk about Mullen here. You see this number at the top here? Well, you probably can't, but let me zoom in on it here. That is the peak if you wound back all the reverse splits. That number, I'm pretty sure, what was it? It was above quadrillion.
Yeah, it was above quadrillion. It was like septillion or something. I forget what the number was.
Like that. That's how bad the dilution and reverse splits in this company have been. Like, you want to talk about obliterating shareholder value. Like, it's at 59 cents now. This is if you unwound it all and went back to the peak back in 2020. This big ass fucking number.
That's crazy.
That is incredible.
Like
That's impressive.
Seriously.
It's impressive that it's still listed on NASDAQ.
I know,
like,
right?
8 reverse
actually
splits in almost 2 years.
Shameful that it's still listed on NASDAQ. It's like, what are we doing here? Like, how is that exchange listed?
Not even mad. I'm just impressed. A hell of a drop.
Game recognizes game. I'm not even mad, bro.
Bro. Yeah, certain level of talent to pull that kind of stuff off.
But you said you were probably going to wrap it up, or you want to stick around for Shenanigans Town.
Okay, I'll take it 3 more minutes.
Okay.
I'm
So Shenanigans Town. We've got our opening salvo in Shenanigans Town. I picked this one from Meltdown because it actually redacted some personal information that was on here. But Platinum, why don't you go with this one? I'll let you.
So this is what's happening in the Bed Bath & Beyond docket these days. Okay, this is the guy.
So we probably should back up to the Jeffrey Curzon thing that this is referencing first. The horses that we were talking about earlier.
Okay, he sent me, someone had audio of all this stuff. I listened to that, and that was just, it took me like 2-3 days to get through it just because the judge was that the one with the judge on it, which is being pretty brutal? Yeah.
Yes.
I mean,
you couldn't be any
actually super nice.
By the way, I'm responsible for that.
Yeah, he's the one who has the audio.
Okay.
But the judge, the one who it was like the share, they couldn't be any more naked and shorted. There are no
shares don't exist anymore, dude.
Oh man, that judge is
he was trying to get
a
count of the shares for some unbeknownst reason why he wanted a share count.
Well, because he thinks that equity like is an asset or something to.
No, it's a liability on a balance sheet. Funny that it's technically paired up with the liabilities on the other end of the balance sheet. Try again.
And then this guy here wrote in, and so this is on the official docket, and he's saying, with due respect, this is blank, shareholder of bankrupt company BYQ. Hereby, I let you know that I am disagree with the objection of Michael Goldberg. In addition, I am requesting to be appear by Zoom call on July 1st, 2025 at 10 a.m. Eastern. I appreciate that to send the invitation link. Note, I disagree about the statement by Mr. Michael Goldberg. My investments total of $101,000.
Jesus.
Oh,
Yuck.
oof, that hurts.
Uh,
Shares bought through Robinhood brokerage when the BBBYQ Inc. files for bankruptcy. All my shares in capital removed from my Robinhood Holdings account. All my assets removed, and I haven't received any refund from investment. In addition, I blank as an individual investor and shareholder of Bed Bath & Beyond Inc. I own and purchased 165,288 shares of BBBYQ from the Robinhood broker app that is worth about $101,000. On October 18th, all my shares were removed due to Bed Bath & Beyond bankruptcy. I claim to BBBYQ company that those shares I didn't not sell has removed without let me know, and I didn't get any refund back. I really appreciate your cooperation to assist me get my refund and shares.
Not how that works.
Yeah, that's that. So
You know how like you're on Wheel of Fortune, you spin and you land on the bankrupt wedge. It's all gone. It's gone.
Average was well under $1, right? I mean, when it. So I remember because I think one of the last shows I did when it lost $1, it was super clear like this thing's going to zero. So to load up sub $1, that hurts my heart. That's the damage of all this stuff though. Like people got caught up in it, right? And it was just like,
yeah, but then I mean they filed a 10K right before they canceled the shares, and it showed that they had like negative $3.5 billion of earnings, right? So
there was a going concern. Like
well, there was a going concern way before that.
way before that even, like, which I mean, accounting nerd speak, that's a high bar to put that in there, right? Like just
you don't know. People think that that's actually
just
boilerplate language. Like literally, people have said that the going concern.
Okay, I do. Okay, now we're going way back. So I do remember I was when I was on one of the shows.
PTSD.
Yeah, I guess I had. Yeah, okay, now it's coming back to me.
Yeah, he like
coming back to me now.
Like, oh
no. Because I was on the show pretty regularly for a while, and then someone brought, and I was pointing out the severity of the going concern, like this is the real deal, and someone like this is boilerplate, and I just went off the top rope, like that's not like
no,
we don't. Accountants aren't just going to type words. Like this stuff has meaning, right? Like if people want to play finance, like very specific things mean specific things, right? So like if I'm going to drop verbiage in here. Yeah, like I say words to other finance people knowing that they're going to catch what I'm saying, but like when you call it boilerplate, you're missing it all. Like go check, see how many companies had going concerns, right, and how that ended, right? So I forgot. I'm mad again.
Mm-hmm. Yep, I had people tell me that bankruptcy is boilerplate language because it was
voluntary.
In one of their filings like 47 times. I was like,
it's bankruptcy protection. We're protected, guys.
Right. Oh my God. Yeah. And then there was that. Like, oh boy. Yeah, there's been a lot. But okay, let's just really quick. If there is a going concern risk, what exactly does that mean? Can you just like explain what that means a little bit?
Yeah, so it's a good question. Accounting principles, the 2-minute answer is accounting principles have a presumption that you're going to be in business for 12 months or greater, because if I'm accruing things into a future period, that future period needs to exist, right? So, and then in accounting stuff, there's certain things that have thresholds for using like more, you hear some terms like more likely than not, I think it's like 50%, and then substantially, I'm going to butcher this live. So Google accounting terms, the percentages, and it'll tell you the breakout. When you say going concern, I think the threshold is the auditors are saying.
I thought it was 75%.
I think it's 75%.
Like there's a 75% chance that they won't continue for the next 12 months.
Yeah, it's like the auditors and management basically going to agree that there's a 75% chance or greater that you're not going to exist in 12 months. And they're basing that based on your current liquidity, the short-term debt, the interest that you're incurring, and operationally, right? How if you're generating operational loss or not, right? Because that's usually what kills it. Like you get upside down on the company, and then if I look at how the business is selling stuff, if you're losing 10 cents on the dollar and you have negative equity and liabilities in excess of assets, like you can't dig out of that, right? Because you're losing more money. So, yeah, going concern is like 75% chance or greater that you will not be there in 12 months or less. And it's when you understand the auditor and corporate relationship, like the company pays the auditors, right? So like the idea that the auditors are going to come to you and tell you that you're not going to exist, like they don't want to do that, right?
Right.
So there's some subjectivity there. But all I have to say, like a lot of smart people on Bed Bath and the auditor side came to that conclusion and put that in there, right? So that to dismiss it as boilerplate is just, I mean, it's insulting at best, right? The people that were, but it's about as serious as it gets.
Right. And we do see that on a lot of filings,
Yeah.
of stocks that you see on Twitter, right? Like you see a random stock being pumped on Twitter by a few different people, and then you go and look at their financials, and then there's a going concern risk. And I feel like people just don't take it serious, right? And I feel like it is a pretty serious thing to consider.
Yeah, because I think people think accountants are lawyers, right? So when you look at the disclosures, yes, like there's some things that are required to be in there, but they're specific to the business, right? Because like GAAP doesn't want people to put just 100 pages of disclosures in with all this boilerplate stuff to kind of like confuse and bury issues, right? So if you put stuff in disclosures, it's got to be relevant and accurate to the company, right? And again, there's some subjectivity, there's some paint with broad strokes here, but like I can't just load up my 100 pages of notes with 98 pages of garbage, right? It's got to be stuff that's genuinely applicable to the business, right? So, otherwise you would see going concerns in all disclosures, right? Like we could always go broke, right? But you don't, right? You see it under specific circumstances, and that's for a reason.
And it highlights when there is a problem that it means something, because if it was just boilerplate and you threw it in there, then it'd have no meaning when it needed to have meaning. So they put it in there for a reason.
Yeah, and that's what with Bed Bath, I went through the management discussion. I showed how the verbiage changed over time, right? Like you could see it. They're signaling in the disclosure, like these things are happening. We don't know where liquidity is an issue. Like it ratchets up, right? So it's to their credit, they tried to warn people, but people had other ideas, right? So, but no, that's a good question. But no, it's definitely never boilerplate. And disclosures in general, I think they're kind of intimidating because they do get longer. But if you can just if I had one thing for like value investors, if you just keyword search on like revenue, inventory, liquidity, and debt, if you don't have time, if you just keyword search 4 or 5 of those things, then you can learn all you need to know in a couple minutes.
Cool.
It's fun.
So, is that all the time we have left for you, or do you want to stick around for Bill Pulte?
Oh, God.
I don't want to get murdered. I'll go on Oz because I'll let y'all run with that.
That's fine. That's totally fine. We'll take the arrows for you. It was great having you on though for this evening, and hopefully we'll have some actual like meaningful finance stuff to talk about to bring you in on more often.
Yeah, no, it's entertaining. Hopefully it's useful, but it's always fun to talk about nerd stuff. So appreciate y'all's time.
Thank you. Thanks for coming by.
All right, thanks, y'all.
All right, so back to the stupid stuff.
Yeah, back to degeneracy.
Back to the degeneracy, crypto degeneracy. In fact.
Oh God.
So, let's see here. On the 23rd, Pulte had said that they're doing a study of cryptocurrency and using them as qualifying for mortgages, which led to the usual suspects promoting it. The SPAC Jesus and crypto Ponzi bro, who brief side quest. I saw something recently that was put up where he was basically, where was it? It's in here somewhere. I stuffed it in here somewhere. Oh yes, this one. Where he's suggesting that people borrow $1 million, pay 10% or less in interest, That's a great assumption to roll with.
Oh my God,
And leverage
ask
your
friends and
future
family
on
for a loan.
Bitcoin.
Like, this is a true MLM.
This is literally a Ponzi scheme. Come on. Like, what the fuck?
This is crazy.
Bitcoin Prague. And this
Tap
dumb shit's on
underutilized assets? What does that mean? Use capital intelligently by doing what? YOLOing all into Bitcoin.
Pretty much.
Ask family/friends for a loan. Like that.
Oh my God! This is an MLM. Holy
very
shit,
MLM.
This is a cult. Like, crypto has become a cult because of this fucking dipshit.
Don't pay off cheap debt. Like, okay. What does that mean?
This
Don't pay off cheap debt.
Like the ask your friends and family for loans for money, get them involved. This sounds like the same stuff we've seen in meme stocks. And how did that work out? How's that one working out for you, bros? Fuck. Anyway, he
just wants to pump his own bags no matter what.
Pretty much. We finally get to. So we're going to be using, like, he doesn't even specify. Like, here, I'll go pull up the order. Like, he doesn't even.
Oh,
specify.
also, what's her face? What's her name?
Oh,
Kathy...
we'll get to Kathy Woods. Don't you worry.
Okay.
We're slowly making it through the morass here.
So you saw that. All right.
He doesn't even specify. He just says cryptocurrency. So of course there were a bunch of memes about fart coin being used as collateral for a house, and
Yeah, of course.
with all the Big Short memes that you could ever wish and dream for.
Yeah, like this is exactly what I expected when Pulte got in here. Was like just some random bullshit and then him signing his name. And
guess what? We got terrifying random shit and him signing his name.
Yeah.
Here's a good one. We're talking about mortgages.
Dog shit coins wrapped in cat shit coins. That's pretty funny.
Let me see here. What other good ones do we have in here? I think I untagged a lot of them, but there was one about how he had his, like, they were talking about mortgages collateralized by fart coin. You remember the scene with the stripper where it's like, I have 5 condos. It's like, I have 5 condos leveraged up on fart coin.
Yeah.
Like, and he was getting shit too, because also at the same time he was working this grift, he was talking about, I'm sure I've got that one too.
Oh, the stupid interest rates.
Yeah. So I'm sorry. We're not done with all the crypto grifters yet. Hello, Grant Cardone. Long time no see on the show. Fannie Mae is changing the home ownership and mortgages so that I can profit more on my real estate scams.
Pump my bags.
That's literally what all these people are. Pump my bags. We got Chamath, pump my bags. We got Michael Saylor, pump my bags. Grant Cardone, pump my bags. And of course, Anthony Pompliano, pump my bags.
He didn't even show up to the Pulte event. Remember, he was invited and announced to go to the Pulte event?
But now here he is, giving Pulte-free blowjobs under the subway bridge.
Yesterday, the chairman of Fannie Mae and Freddie Mac, he threw an absolute missile into the national conversation around Bitcoin and cryptocurrency. Here's what he had to say. Bill said that after significant studying and in keeping with President Trump's vision to make the United States the crypto capital of the world.
The pretentiousness of this from the desk of Anthony Pompliano. Like, who the fuck are you?
Also, significant studying, like as if Pulte's
it was 2 days. What significant studying?
Anything in his life?
It was 2 days before that post that he said they were studying it. 2 days later, after significant studying, we decided
all
that scamming
the due diligence before he bought the Bed Bath & Beyond bonds. This has those vibes.
Today I ordered the great Fannie Mae and Freddie Mac to
the what was it that he said for Virtu, the bar like
the Sharpe ratio of 25.
Sharpe ratio 25.
Too high. It needs to go down to 2 to 3 like Citadel. So stupid.
Prepare their business to count cryptocurrency as an asset for a mortgage. Now, why the heck does Bill Pulte have to do this? Well, for those of you that don't know, banks and places like Fannie Mae and Freddie Mac, when you've previously applied for a mortgage, they've simply said, we're not going to count your cryptocurrency as part of the assets when we underwrite that mortgage.
As they should in most cases. And like, you could make an argument that like some of the more well-known ones like Ethereum or Bitcoin, if you have a certain bank, maybe, but like there's a lot of volatility. No one wants to hold those assets that like if they need to like if you're underlying it as assets that they need to seize if you can't pay your stupid fucking loan.
Right. Yeah. Like so now if Bitcoin goes down, all these people are like
underwater, and the bank is also underwater because they're claiming an asset that has depreciated in value as well. It's like saying I want to leverage up my home mortgage backed by my IRA portfolio. Like, what the fuck are you doing?
Yep.
It's kind of crazy. I went through this myself when I lived in Miami. I wanted to go buy a house, take out a mortgage. And when I went to the bank, they said, any crypto you own, that's a big fat zero when we evaluate what your assets actually are worth. Now, why is that? Well, they're volatile. They don't really understand it. And the bank didn't have a view on whether these assets would actually exist in the future or not. That's all behind us. BlackRock's got ETFs, public companies.
It's not behind us.
There's nothing different.
We literally, like even if at its highs now, we've had wild swings from up to 110 down to 90. Like,
well, yeah, but it's all based on speculation. I mean, like even MicroStrategy doesn't accept Bitcoin on their website to buy merch. So,
oh, that reminds me that I missed it when we were talking about the I kind of skipped over it because we were kind of speed running before Running with Bears had to go out the door. But did you see that Mullen's accepting Trump coin and I think Bitcoin for buying their mythical non-existent cars?
Ooh, wow.
Getting in on the grift on the ground floor.
Well, remember Tesla was doing that, but then they stopped?
Yeah, they stopped because like
right.
The same reason
because they sold their
Bitcoin.
They didn't need to pump their bags anymore. So they were like, nah, forget it.
Yeah. And no one wants it on their balance sheet. It's too volatile. Well, except unless you're trying to scam shareholders, then, you know, put it on the balance sheet. Cool.
You're buying Bitcoin. The government.
Otherwise, it's going to minus your income.
Yeah.
Actually likes Bitcoin now. And so, of course, the banks, they got to follow.
Everyone likes Bitcoin now? What? I mean,
suit. And so this change at Fannie Mae and Freddie Mac, I think will be the wedge into the market for every bank to start to look at cryptocurrency.
Not really, because any bank can decide that regardless of what some dipshit on the like he got absolutely roasted for this from every corner of the internet.
Oh, really?
Like, well, they were all making all the memes about how this was a stupid fucking idea, and it's.
Oh, you mean Pulte got roasted?
Yeah.
I thought you meant this Anthony guy.
Well, I mean, he should be roasted too for basically sucking his dick, but you know, like he's a crypto bro. Of course, he's going to bend over backwards to polish anyone's knob who's promoting crypto. Like that's not hard to see. Follow the money, but like no, this means nothing for other banks. Like banks will make their decisions, like you know, just because they haven't like BlackRock has a Bitcoin ETF. And that they can take fat fucking fees from average investors to run a Bitcoin ETF. That doesn't mean that, like, you know, Goldman Sachs is going to collateralize your fucking home mortgage with your Bitcoin investments. Like, this is all like we said already. This is all like MLM, scam, grifter, co nonsense.
Assets as part of someone's application for a mortgage. Now, you don't get punished for holding cryptocurrency if you want to go and buy a home. But first, before they do that, there's some nuances in the Bitcoin and crypto world that are very important. Take CASA's Nick Newman. He called out the fact that it looks like Bitcoin held in self-custody will not count as an asset for consideration on home loans. He believes that's a mistake, and he said to Bill Pulte that self-custody is fundamentally aligned with American values. It's trivial to prove ownership of Bitcoin in self-custody. I agree with Nick, and I actually believe that Bill Pulte also agrees as well. We want people to be able.
Well, you would know because you two are like fucking butt buddies, but anyway.
To hold whatever financial asset that they actually want to hold. Let them do with their money what they want. but then they should also be able to use those financial assets when they apply for a mortgage. It looks like Bill Pulte, somebody who's been very sympathetic to the Bitcoin story. He understands the technology. He holds Bitcoin, I believe.
He understands it. No, he's a talking head who was put in there. I doubt he even drafted that document to begin with. And it was not his idea.
If he had Bitcoin, wouldn't he have to disclose it on his financial forms? Okay, so he has none.
Gotcha. Yeah. He had nothing to do with that. He is the talking head for the administration.
Right.
Like, this dude does not have an original thought that pops into his fucking head. He did not come up with this. Someone told him to do it because he's a bitch boy.
Somebody wrote the actual paper for him and just told him to sign it.
Yeah.
And now he's helping Fannie Mae and Freddie Mac enter into and be one of the first to look at Bitcoin and crypto when you apply for a mortgage. My prediction is that we're going to see a lot more of this in the coming years.
Good, cool story, bro.
Yesterday, the chairman of Fannie Mae...
I'm sure we will see more grifting before the bubble pops. I suppose he's right on that. On another side quest before we get to what you were saying, he's also starting a $1 billion Bitcoin narrative financial services. I don't even know what that fucking supposed to mean, but he's got yet another crypto grift. I think a couple episodes back we talked about this fucking SPAC he was running, and now he's got another $1 million, or maybe it's the same thing and they found something to merge into. But yeah, it is what happened here. So yeah, we do. That is his SPAC getting ready to. I thought SPACs were dead. Why are we doing this again? I thought we all agreed that SPACs were scams, and here we are again. But here's what you were talking about earlier, Platinum, that even Kathy Wood is on the pump my bags train.
Mm-hmm.
I don't know.
Shut up.
And then of course we had we had the stuff that I was talking about earlier, where people were jiving him about the whole situation with the mortgage rates, and even Peter Schiff came swoop. I mean, Peter Schiff is kind of a low hanging fruit. He was going to he's kind of a doomer in the opposite direction, where, Peter Schiff is, correctly predicted 12 of the last 2 recessions. But there was a whole bunch of people coming after him, and a lot of people are starting to realize that Bill Pulte habitually lives on Twitter, and all he does is basically
have manic episodes and
yeah,
flip out about something for some stupid thing for days at a time.
Yeah. And also, so yeah, that pretty much does it for Bill. Let me queue up the next thing here.
Thank God.
Yeah. We didn't really I don't even know what to say at this point. I mean, I do have a handful of shares of Fannie and Freddie just as an experiment in stupidity, but it's not been doing too bad. Yeah, it's been mostly trading sideways as of late. There's been some spikes, and if I was a little bit smarter, I'd sell the spikes and then wait for it to come back down and buy back in. But
yeah, I had some, and then I already sold it a long time ago. I made
I'm basically
that was good.
I'm basically expecting that the minute the news drops that they're going to do something, that's when I'm gonna there's going to be savage amounts of dummies buying into this, and then that'll be my. And if they don't go anywhere, well, I mean, I did get a pretty decent price to buy into this, and I'll just waddle my way out the back door. But yeah, I'm still up on that. It's an all right position. I haven't gotten too far into it. I don't have that many shares, and so if it goes bad, it goes bad, and I move on. So, we also have some new Intertate stuff to talk about. So apparently the charges out of California were dropped. There's still going to be civil charges, I guess, pressed on that. I suppose when you have a bunch of L's, one win is a huge win. But you still got, let's see here, the UK charges that were pushed for it. I think we talked about that last week. Oh, no, it was this week. So basically, the trial was set for 2027. It's going to be 2026 now. So that just makes it seem like that the Romanian stuff either is going to wrap up soon or they're expecting to just drop it and move everything to the UK and just have the UK handle it if they're moving forward the court date. Because if things are still going to be going on in Romania, then why would you do that? In good news dealing with Andrew Tate, there was a report that came out about Andrew Tate's influence in the U.S. and the U.K., which has basically said that, there's been a lot of concern that Andrew Tate has any influence. And apparently, according to a survey of respondents in the U.S.
Yeah, but
UK,
what's
and
the
Australia,
survey? Is it like a phone call survey, right? Is it like
Yeah.
an internet survey? I guess that would really matter.
Yeah. Showing that only 7% of people reporting to be influenced or even aware of Andrew
Even
Tate.
that is too much.
Well, obviously, but there's a lot of concern about, to what extent Andrew Tate has, and it's good that at least 7% is too high. Any number is too high, but at least it's sub 10% over 3 continents.
And we can
So
only
you had to
hope.
really bundle it together to get enough people to actually register his existence and count it as an influence. Speaking of Andrew Tate, how about Andrew Tate sycophants? I know this is a little outside reaching a bit, but I thought that this was already clear news that Candace Owens has been a longtime grifter. She's just figured out that it's more profitable and easier to grift on the right than it is on the left. But apparently people are digging back up again her whole social autopsy thing again, where she was promoting herself to the left as going out and finding hate speech people and doxing them and all that stuff and keeping an internet archive of all these people. And that fell through. And then she became a right-wing grifter. It's
Oh, wow.
yeah. So, yeah, I thought that was a thing that everyone already knew. And
This is the first I've heard of that.
Yeah, I knew about it back in the day because, I'd follow stuff I don't follow them anymore, but I would follow stuff like Sargon and Cod. And that was back in 2016 when it was probably 2018 or it was somewhere in the middle of the Trump administration, that first one. She was making the transition to right wing, and a lot of people were questioning her about this of look, you were doing all this stuff and now suddenly you're playing this game. And then all of them forgot about it and everyone else apparently forgot about it, and I didn't fucking forget about it. It's you went from here to here and now you're playing the same tactics that you were doing over here, and now you're cozying up to Andrew Tate, who's a massive piece of shit. I fucking see you, bitch. It's not
I only heard about her when she got fired from her job, last year or whatever.
Well, yeah, when she got fired from
Forgot.
Oh gosh, yeah, I know I should know because it's I can't even remember who owns the site now. That's how blanked. The Daily Wire. Yeah. She was.
That's when I heard about her.
Yeah.
And then Ann Carroll went on her show and blah 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 recently.
Yeah. Oh really? I didn't hear about that one.
Oh, you didn't know that?
That seems like the team up that really is unexpected because she's also become a raging anti-Semite too. So that was a match made in heaven.
Yeah, he took over her show. She just had a baby, and he took over her show for a couple weeks, or a week or something. Yeah.
Oh, I'm glad that he and Carol has bounced back nicely from being on the PP.
Yeah.
From what was it, GriftCon 2, and then main
3
speaker for GriftCon 3, BaggyCon 3. So yeah, he's really bounced back. It seems like. He's just kind of moved from one conspiracy group to the other, just kind of picking up people until, grifters everywhere. Like the Buzz Lightyear meme, grifters everywhere.
Mm-hmm.
Oh wait, what's this? We're getting some DD from rubbing my axe here. Did you hear Ian Carroll's
Oh,
meetup
yeah.
event got canceled? You know anything about that?
Well, I think it was supposed to be in Boston. He said it was because people were threatening the owners of the venue, so they backed out. Yeah, that's what I heard too.
I want given he's a grifter, I apply trust but verify. I have no evidence to prove that's wrong, so we'll go with it. But I get the feeling that that's a nice, convenient way of saying no one wanted to show up.
Oh, I doubt nobody wanted to show up. I don't think that's true at all. I think he probably could have sold tickets for sure.
But
I'll bet you the crazies probably did harass.
Marks at least.
Well, because he put out this video of like it was the venue owners that made the video that was like, oh, like showing the whole venue. Guaranteed they probably did get harassed by people online. Like, yeah, it's the internet. I wouldn't doubt it.
We also get to talk about something we talked about last week. I was hoping he'd be at the.
Yeah, they are over with for sure.
Yeah, as soon as he got into public office, he stopped needing any of those people. Yeah.
He's beyond that.
The whole point of those was to prove that he had some sort of following, so he could apply it into a political. Like that had always been his goal. It seemed like get in with the meme stock people to show that he has some sort of mythical following that he could turn into a political career since his, time since his time at Pulte Homes was not long for this world. But anyway, so finally, what we expected to happen, Trump Mobile dropped on its website the claims of being made in the USA, but they're still, according to CNN, making soft claims like designed with American values was replaced on the website, but they haven't like retracted or removed
with
any
American
of
values in mind.
And while having a phone
while
mall
making it
that
in China.
looks like while making it in China with semiconductor fabs that were probably made in Taiwan. And yeah, like even the last phone that did this, I can't remember what it's called, but there's been a made in America phone before this that they had to resign to assembled in America, because like we talked about before, until Intel gets off the ground, all these semiconductors, like the processors, a lot of your RAM, a lot of the putting together of the silicon components, they're just not done in America. Like the board manufacturer might be assemble all the pieces in America, but like that's like that. Welcome to the global society that we live in. They this is made over there, that's done there. The resources are extracted from over here. It's assembled over there. Like that's the interconnected capitalist world we live in. If you don't like that, well, tough shit, because unless you want to pay like 10x more for an equally incompetent, I don't know what to tell you. Well, welcome to the future. Get over it. I don't like we even talked about the tariffs video from Gamers Nexus, where they were talking about there's some things that you can't even get manufactured in America. You have to go with a foreign producer. So it just feels very tribalistic and nutty, some of this stuff. Here, what else is some of this stuff here? Before we get into the last thing that I kind of want to wrap up with, we have one more thing. Did you hear about the Turtle Capital Government Grift ETF?
I did see that, yeah. So this is the same people who came out with the GMEU thing that's being talked about a lot. So yeah, I did see that. And I am bullish on government grifts.
I mean, we just got done talking about it. Like this, like it's become grift central ever since Trump got in office. So I mean, if you want to securitize that into an ETF, I might buy that.
That's what I'm saying. Exactly.
It seems like we're gonna get 4 years of grifting, so that ETF will be good for 4 years. Back it all in. We do have some updated news. Despite Texas saying, "Hey, could you possibly potentially maybe halt this robo-taxi testing stuff in Texas?" Tesla was like, "Hold my beer." What did you say? I couldn't hear you. They decided to go with instead of doing an actual robo-taxi where it drives itself, they had safety drivers who would sit in the front passenger seat, and shenanigans were afoot. There was whole reams of footage being posted on X and across the internet, keeping track of all of the incidents. I don't have it here on this. And it looks like the images here were blocked and don't exist anymore on Yahoo, probably because they're pulling the article from somewhere else. But they were talking about all the different incidents that were caught on video of the robotaxi speeding on its first test runs. Once again, we've even got the NHTSA looking into the incidents that have been going on because of is aware of the referenced incidents and is in contact with the manufacturers to gather additional information. Well, best of luck to you, because the NHTSA has been following this whole FSD stuff for a long time now, and has been really slow to act. And I wonder how much acting they'll really be doing, considering, well, I don't know, since the falling out with Trump and Musk, maybe them looking into Tesla and taking the FSD off the road might be back on the table, but I don't see it as a thing that's going to be probably happening anytime soon. I would hope it would be, but I don't know. What's your thoughts? Do you think we're going to get any sort of stopping of this whole thing rolling from government regulators anytime soon?
No, absolutely not.
I did find one that was particularly funny. The robotaxi dropping a cup off in the park because it was about to rain.
Yeah, remember I told you that I was reading the thing for the app and it said that it doesn't work in inclement weather.
Probably because it's driven by cameras and maybe
right, and not LiDAR.
Yeah, which is a really dumb idea.
So dumb.
I think we may have talked about this last week, but I will just reference it again that French regulators are ordering Tesla to stop its deceptive business practices and stop calling FSD self-driving and all that stuff.
They really should rebrand that, honestly.
Yeah, it's
to
not
something
self-driving.
else, right?
And as we talked about also last week, that huge dive in EV sales and in China, switching to Chinese EVs. So I'm sure this will work out very well for Tesla's share price. Totally broke.
Didn't the share price tank and then it was going up at the end of the week?
Yeah, they had the bump for the robo-taxi, and then it immediately dropped by the end of the week because people saw it was one of those sell the news events. The news came out and it pumped, and then immediately as soon as people saw what was really going on and how these cars were responding, suddenly all of the hype got sucked out of the hype train, and it went back down. Last thing to wrap us up for the night. Did you hear about the whole HIMSS thing?
Oh yeah, the compounding. The company said that they were doing some shiesty compounding
that they were told not to do.
Right.
And so they got pulled from being able to use the product, and the stock immediately plunged 34%. So
yeah.
So shiesty shit, not just meme stocks. It can be companies that are out there doing their thing. So yeah. I guess that brings us to stupid tweet of the week. I think you said you had something ready.
I don't think I said that. I don't think that was me.
There you go.
Let's see.
Because I know I got something. I just got to pull it back up again. There it is. Ha ha. Oh, no, I'll do it from where I posted it because that'll be much cleaner. Stand by. So, I'll produce mine first. Let me get stuff set up here, so that way we're ready to go. I gotta make the poll first. I will say if I win that Tony gets to share the trophy with me because he's the one who showed it to me. All right, so I'm good to go. So I will go ahead and run this beautiful beam footage. There we go. So to start us off, we have one of our favorites, number one cuck, John Hartranett, and he made a post. He put a clip from his upcoming video, the teaser thing. It says, "Paid by Adam Aaron, test preview at Grok. Define the psychological term projection for viewers." Now, of course, since you put it in there, Grok's going to analyze the video and your post. I think we can tell how this is going to turn out. So Grok goes, "Projection is a psychological defense mechanism where individuals attribute their own unwanted thoughts, feelings, and motives onto others, often to avoid confronting personal issues. In the context of AMC, some may project frustrations about financial losses onto CEO Adam Aaron, blaming his compensation or decisions. Aaron's 2023 pay was $25.4 million, dropping to $11.3 million in 2024, sparking debates. Critics argue his pay is excessive given AMC struggles, while supporters credit his crisis management. The Paid by AA video likely critiques these financial dynamics, reflecting shareholder tensions." Now, so Grok doesn't all out say that his video is bad, but it says the part that, well, people aren't taking responsibility for their own decisions to buy the stock. Now, naturally, our good Project Popcorn buddy, John Hartranett, does not like that analysis and then accuses Grok if Grok is also paid by Adam Aaron, to which Grok says,
Nope.
no. No.
He actually says nope.
Not paid by anyone, including Adam Aaron. So if I had to say here, if there's someone who's having a problem with projection, I'd say it's John. And that's my submission.
Womp womp. Mine is, I actually took the screenshot. I forgot that I did take the screenshot. And this is a reply to somebody. Me trying not to punch the picture of Ryan Cohen on my fireplace each evening when we haven't emerged.
Why do you have a picture of Ryan Cohen above your fireplace? Oh my God.
Yeah, there's a lot of things wrong with this.
So we have the poll going on YouTube. We will take voice votes from our ape shareholders on Twitch.
My axe, you can do it.
Yeah, we've got 2 actually on Twitch tonight. It's really, it's been a banging business night. So yeah, we'll give it a chance for that to file in. What has been some of your thoughts about some of these balance sheets we've been looking at tonight?
I almost feel bad for Running with Bears. I always show him like the bottom of the barrel.
The shittiest companies possible.
Yeah, like I feel
we
like
need to find him a present. We need to find a nice company next time.
We should. Like I feel like we do focus a lot on because it's so prevalent, right? Like this is the crap that does get pushed on social media. It's like you don't really see just like normal shit ever.
Or at least shit that maybe like might be a value investment. Next time, maybe we'll spring coals on
Or
them
that like
something.
pays real dividends. Like never mind this like make believe like proceeds from a potential lawsuit.
Oh yeah,
like,
we can. Well,
dividends.
speaking of real dividends, why don't we maybe next time we can spring Virtue on them or something.
Right. Good point. Yeah.
Yeah.
We should do that. Oh, he votes for me.
Oh no!
Thank you. It is funny. It's so stupid.
Uh-oh. It's going to be a three-way split of the trophy if I technically win. Because I got a vote on YouTube. You got the Twitch vote. And
Well, that's an 8 vote. So his vote.
That's 8 vote. So it's a
Counts as more
tiebreaker. Okay.
He's the Antera vote.
The Antera vote. Well, yeah, that's right. Because since it's the Antera vote, the 8 vote, that means that even though that we didn't get the other vote from Twitch, it counts as 2 votes because there's 2 viewers. Because that's how the 8 shares work. Boom.
Exactly.
There we go.
And then he can just sell his shares right now after he's done voting.
All righty. Well, that's that taken care of. Any final thoughts for us this evening, Platinum?
Not really. Happy 4th of July, everybody. That's next Friday.
Yeah. But yeah, I hope you have a lot of fireworks to blast off and maybe go to a show. I don't know. There's a nice show down by the lake that maybe I can.
Yeah, there's a bunch of fireworks around me.
Yeah. So enjoy the rest of your weekend, and I will see you all next time.